Let's revise day one. So we saw background of the subject, how paper will be there, and then how to prepare, what should be our approach during the classes. Now, the first thing was a simple case study where a chartered accountant was doing a bank audit and he accepted bribe from the borrowers, and he has not reported about some NPS. That's completely unethical. He's accepting bribe and giving wrong reports. It's an unethical activity. He will be punished. So we have a complete mechanism to stop such things, and if someone does it, such chartered accountants will be punished. So that's the message of the first overall case study. Then we saw introduction. Ethics are the principles which tell us what is good, what is bad. Professional ethics means professionally what should be done, what should not be done. And it's very important to follow this principle. Then only people are going to show trust on us. And trust is the most important thing on which everything is made in our profession. To maintain ethics, we have a code of ethics booklet. It's mandatory for all the chartered accountants to follow this booklet. If they don't follow it, they will be punished. Our motto, Ya Esha Sapteshu Jagriti, is based on ethics. It says that chartered accountants are supposed to remain ethical even if the world is not ethical. They are supposed to follow proper path, correct path, even if world is not doing that. So don't look at what others are doing, just follow what is correct. Overview of Code of Ethics booklet. The structure is very simple. It is divided into 4 parts. Part 1 says that everyone has to follow Code of Ethics, and it gives 5 fundamental principles. Part 2 is applicable only to those chartered accountants, those who are in service. If a chartered accountant having certificate of practice is doing part-time, full-time employment, any kind of job along with COP, then again part 2 will be applicable to him. Part 3 is applicable to all the chartered accountants who are in practice. Part 4 is independent standard. That's a very important principle on which everything is based. So we have part 4A, how to maintain independence if you are doing audit or review of when you are doing audit and review engagements. Then how to maintain independence if you are doing any assurance engagement other than audit or review. So for audit and review, you have part 4A. If you're doing assurance other than audit and review, you have part 4B. Then there's a glossary. It simply explains all the critical terms, important terms used in Code of Ethics. So if we talk about structure of Code of Ethics, so if you go to structure of Code of Ethics, you go to any section, you will find the introduction part. It has a background, it gives the outline, what kind of things are covered in that particular section. Then it gives a requirement. So these are the obligation, mandatory things which chartered accountants are supposed to follow. It can be general. In general, you have to follow this across the profession, across the service, or it can be specific to a particular situation, to particular type of entity. Then there is the application material. It gives examples on how to implement the requirements, what kind of challenges you may face, how to overcome them. So three things are in the structure, and then the overall message that whatever given Code of Ethics is mandatory, required for all the chartered accountants. Yes, sometimes law or regulation may override what is given in Code of Ethics. That's absolutely fine. You will not follow that particular portion, but the other portion of Code of Ethics will be always applicable. So that is what we saw today. We had a very small lecture because of some technical issues. From tomorrow onwards, we'll have a proper lecture. So 5 fundamental principles which chartered accountants are supposed to follow are, the shortcut is Office of CBI is going to tell us. O stand for objectivity, C stand for competence, professional competence and due care, C stand for confidentiality, B stand for behavior, professional behavior, and I stand for integrity. Now, let's look at them one by one. Let's look at integrity. What do you mean by integrity? It is simply whenever you are communicating, reporting, or taking decision, it should be truthful, it should be honesty, it should be straightforwardness. Now, when it comes to its application, number 1, don't associate with any information, any document, any report which you know is misleading, false information, omission, obscured information. Next, If after accepting assignment you come to know about that the information given is completely false, it is misleading, lot of information is omitted, get disassociated. Get disassociated with such information. Next, if you cannot disassociate, and if you modify the opinion, qualify or give adverse, that will be considered compliance. So first of all, avoid getting associated. If you get associated, get disassociated, withdraw from the assignment or modify. So these three things are there in integrity. Then next is objectivity. Objectivity means being unbiased. That means being unbiased. That means being neutral. Keeping personal liking, disliking aside, not getting into any conflicting roles of interest, and not getting under any undue influence, any under pressure. So don't get under any influence or pressure, and don't run behind personal benefits. Then only you will be able to remain objective, neutral. Now, in application portion, they say that if you're getting any assignment and you see that there will be a lot of pressure, personal, family pressures, friends pressure, or there will be conflict of interest, or people are trying to pressurize you to give inappropriate opinions, something like that, don't accept such assignments. Then professional competence. Competence means means adequate, proper knowledge and skills. Having proper adequate knowledge and skills, that is called as competence. So chartered accountants are supposed to have so much of knowledge and skills so that they're able to perform the assignment as per the legal requirements, as per the regulatory requirements, as per professional standards. Now they're supposed to, once after acquiring, they're supposed to maintain on regular basis, go keep getting new knowledge, keep updating your knowledge about law, recent developments, standards, and so on. Next, ensure that the team is also updated, ensure that they also get adequate knowledge, they are properly trained. Now you got the knowledge, then you maintained for yourself and your team also. Next is apply it carefully and be diligent. Work should be performed as per this competence. It should be applied carefully, thoroughly, and timely manner. Transparency. Even after you are working carefully, keep people informed about the shortcomings and the problems which may arise. Okay, you cannot, even after you working, if you are working hard and careful, keep them informed about the limitations. Then confidentiality. Chartered accountants are supposed to maintain secret, non-public information to themselves. They're not supposed to disclose to anyone else. But then and then its application. Don't give this information to family members and close friends and associates. Don't give into other teams in the audit firm or the company where you are working. Don't give it to other teams also. Internal confidentiality. Don't share it with the prospective clients also. Just to impress them, don't give confidential information. And then ensure that you or any of your staff member, anyone is not misusing this information for personal benefit, like dealing in stock market and so on. Exceptions of confidentiality. Can we breach confidentiality? Yes, there can be breach of confidentiality. Now the biggest thing is law. If law says that you can give information in a particular circumstances, you can definitely do it. Breach is allowed. Then regulatory. If regulatory authorities call you, there's an investigation going on and they prove on regulation that you're supposed to give this information, you can do it. If you're in doubt, go for the legal advice. If reviewing authorities, NFRA, we talk about NFRA, peer quality review board, peer review board, if they come to review your work, you can definitely disclose information, you can breach confidentiality. If there is a requirement as per standards, technical professional standard, that in report you should write so and so things, you can definitely breach confidentiality. Then for protection, you can, if a litigation is going against you and you want to protect yourself, in the process if disclosure of confidential information is required, you can do that. And lastly, if client has authorized, where giving this information was not prohibited by any law and client has authorized it, then definitely you can share this information. before you share this information, we are planning to share this information, breach confidentiality, you need to keep in mind 4 factors. Number one, will any third party, any person will get harmed because of this? What kind of harm may happen? Understand that. Then before giving this information, verify this information whether it is appropriate, substantiated, it is accurate, reliable information. Then decide method of communication. It should be private, one-to-one meetings or personal communication to give the information. Then decide the person should be a person of high authority to whom this information should be given. It should not be given to lower authority people. Then we talk about confidentiality. Of course, even after the assignment ends or client relationship ends, you are supposed to maintain confidentiality about the client. About the client, definitely you can use the experience. You can use the experience which you have obtained during the work in your assignments, but then you cannot directly share the detailed information. Professional behavior. Professional behavior means you should respect law regulation applicable to that particular assignment. You should respect engagement letter you have signed, and you should not do anything which will bring disrepute to the institute. You should avoid doing anything which will bring bad name to the profession. Now, the application portion, when you go and you meet clients and you convince them, advertise them, pitch, you should avoid making exaggerated claims about your services. Don't make exaggerated claim about the services. Don't disrespect. Don't disrespect others, and don't disrespect others. And lastly, for advertisement, there are proper guidelines. For advertisement, institute has issued proper guidelines. Their clarification by ethical standard board. You should, chartered accountant are supposed to follow that. Then conflicts. Yes, this may happen a lot of times. That chartered accountants are supposed to comply with fundamental principles, and there's a complete framework for its implementation. But then there's a conflict. Two principles may conflict with each other. Yes, this may happen. They may conflict with each other, guys. Now, this may happen when there's a breach, when there's a conflict between principle of integrity and principle of confidentiality. In integrity, you have to give all the information, be truthful. In confidentiality, you have to preserve confidentiality, secret information, non-public information. Then there's a professional behavior. You're supposed to respect time limits and resources of the client. At the same time, in professional competence, you're supposed to work carefully as per the legal regulatory standards requirements. Again, there can be a conflict. So if there is a conflict, what you're supposed to do, you're supposed to go and discuss this with TCWG, with TCWG management within your firm. Discuss with your colleagues or legal counsel or any authority of any body which C Institute has made. Go and discuss with them how to balance things, how to ensure that compliance with both the principles can be done. And after discussion, make a conclusion and give reasons. So you have to document what was the issue, what was the discussion, what decision was made, on what basis. This needs to be documented. Now, next is threats. There can be circumstances or situation which create extreme pressure on the chartered accountants to go against the principles, fundamental principles. As a chartered accountant needs to do three things. And in that, number one, first thing, they're supposed to identify threats or situations which are creating pressure. Then they're supposed to evaluate, understand it, and measure it, what kind of pressure, how much pressure it is creating, and then address the threat. Chartered accountants may think about if it's feasible, eliminate the threat or reduce the threat by applying some safeguards. Anything which reduces threat is safeguard. So try to reduce threat and bring it to acceptable levels. What kind of threats can be there? There can be five kind of threats. Number one is SSAFI, self-interest threat. Now, what is self-interest threat? Interest means benefit. Self-interest threat. Interest means benefit. So if Chartered accountant's benefits are attached to a particular company or client. He may work in the benefit, he may work in his own benefit and compromise with fundamental principles. If he is a shareholder, debenture holder, depositor, that is self-interest threat, self-review threat. If the circumstances are such that he is supposed to check his own work, his own projects, his own activities and reports and certificate directly or indirectly, that is a self-review threat. So he's supposed to check. He implemented internal control system 2 years back, and now he's doing the audit. He's checking his own systems. That is self-review threat. Advocacy. In many projects, he's supposed to promote. He's supposed to promote or supposed to defend the client. In the process, he may say a lot of things about the client or express a lot of things which may not be true. So, in the process of promoting or documenting, you may breach integrity. You may breach fundamental principles. Then familiarity. There may arise a situation where there is a close relationship with the client because of family relationship, personal relationship, or there is a very long-term relationship. Because of that, there is a lot of sympathy towards the client, and because of this sympathy, there will be breach of confidentiality. Then intimidation. There can be a situation where client is discouraging, threatening chartered accountant to do unethical activities and breach confidentiality, that is intimidation threat. So let's see examples of different types of threats. First, we'll see examples for different types of threats for chartered accountant in practice and then for chartered accountant in service. So example of self-interest threat. So we have divided it into three parts. That some examples, they are connected with before assignment situation, and then for assignment situation, and then during assignment situation, just for memorization purpose. You may or may not write it in exam. So before assignment, suppose if chartered accountant in practice is having close business relationship, close connection, close business relationship, then he will try to protect that and give wrong reports. So that is to protect his self-interest, to protect his benefit. He will do wrong reporting, compromise with the fundamental principle, that is self-interest threat. Then financial interest. If he is having investment in the form of equity shares, debentures, bonds, he has given loan. To protect that, he may compromise with the principle. Then he may quote for assignment. He may to get a lot of assignments. He may quote very low fees, and then he will not be able to deliver quality. Again, he is compromising on the principle of professional competence and due care. Then during the assignment, he may come across information which is very sensitive, very valuable, and he may be tempted to misuse it and breach principle of confidentiality. Then he may come across a situation where past errors which his team has conducted, but then he won't be disclosing it, he won't be rectifying it, just to protect a reputation of his CA firm. So these are the 5 examples where, to protect his own interest directly or indirectly, he may compromise with fundamental principles. Then examples of self-review threats. He has implemented whole internal control system, whole accounting system, and if he is only going and doing statutory audit, then he's checking his own work. It will create self-review threat. If he has only prepared a lot of important documents and registers like provision for pension, provision for tax, fixed asset register, and he's only checking it, it will create self-review threat. Then advocacy threat. If CA in practice appointed to get shares valued, to get shares listed, so he's appointed to do promotion to get more value for the shares, is into promotions. So if he is appointed for such assignment, in the process he may say a lot of things which are not true, again compromising with the fundamental principles. Advocacy. He may be appointed to defend the company in regulatory cases or court of law. In the process, he may compromise with the principle of integrity, objectivity, and compromise with the fundamental principles. He may be appointed for lobbying. Now, in the process of lobbying, so that favorable law, rules, regulations are passed for the client, he may again compromise with the principle of integrity and objectivity. Familiarity threat. If close or immediate family member is sitting in a position of director, officer, or employee, which is direct or employee, correct? If sitting in such a close position, he may not be able to give true report, and he may again compromise with the fundamental principles. If there's a long association with the client, he may have a sympathy in his heart for the client, and in the process he may compromise with the fundamental principles. Then uh, a recent engagement partner now has taken place of director or officer or employee, which is involved in preparation of the financial statement. So he has sympathy towards such person because he was the recent engagement partner. uh, Again, he may compromise with the fundamental principles to protect such person. So to protect for benefit of close family members, he may compromise. Long association, out of sympathy, he may compromise. Because the engagement partner is sitting in an important position in the company, he may again compromise. Then intimidation threat. The client may intimidate that they will disclose significant gifts which auditor has accepted. It's an intimidation threat, very bad. And then they may threaten to dismiss him from the assignment. Intimidation threat. They may threaten him that they will not give him promotion or work which was promised earlier. They will not give him complete work or a lot of work which they promised earlier. So that is promotion threat. It's again intimidation. They may bring a lot of knowledgeable people and put pressure on the expert that don't go against them. They're very knowledgeable, experienced, and reputed people. So trying to create pressure on chartered accountant. Because of this pressure, he may compromise with the principle of objectivity, and he may give a wrong report. Now, examples of threat for CAs in service. For CAs in service, let's see, self-interest threat. So if a CA employee, if a CA employee has invested, if CA employees is having shares or debentures or bonds of the company to increase the value of these financial securities for own benefit, he may compromise with the fundamental principles. Then remuneration, to get higher remuneration in the form of bonus and commission, may say wrong things, may compromise with the fundamental principles. To keep getting gifts, more and more gifts, he may again compromise with the principle. To get access to corporate assets, and to keep enjoying it, he may again compromise with fundamental principles. So that is again that is again self-interest threats. Then we have self-review threat. He has only as an employee, he has only given consultancy for merger amalgamation, and now he is only evaluating whether merger is successful or not. He's doing his own work. That is a self-review threat. He has been appointed to develop prospectus, make prospectus. He may write things, he may present things in such a manner which are not truthful, again compromising with fundamental principle. His family members, he is an employee, and his family members are sitting in the company as his close family members are sitting in the company preparing they are in charge. They are sitting in the company and pressurizing him that manipulate the financial statements. So out of respect, out of love, out of personal obligation, he may compromise with the principles. Then he is working for long tenure, and out of respect and sympathy, again he may do wrong reporting, he may do unethical accounting. that is again compromise with fundamental principle. Intimidation, he may be threatened to get dismissed, to dismiss, that he may be threatened that he will be dismissed. That is the intimidation threat. Or he may be pressurized in different manners, in different manners. He may be mentally harassed so that he does the wrong reporting, wrong accounting. That is again intimidation threats. There can be other threats also. A chartered accountant can be blackmailed for some personal things, or if he changes job, the competitor may force him to give the secrets, or there can be government pressurization. So different things, there can be other threats also. Then next is very interesting, is evaluation of threats. Evaluation of threats, that is important. That when we evaluate threat, when we assess the level of threat, we take into consideration what is the environment, conditions, policies at the CA firm or at the company. It has a great influence on the assessment. If they are very good, it may reduce the threat. If they are not good, it will increase the level of threat. Then next is, we need to, while assessing, take into consideration these things. Now, what is acceptable level? If as per reasonable informed third party test, it is absolutely fine to work in this threat, it will not lead to wrong reporting, then it is called as acceptable level. So if as per reasonably informed third party test, there will not be any compromise, then it is called acceptable level threat. Now, what is reasonable and informed third party test? You can apply this threat either by simply assuming things or really going to third party. So it can be performed in such a manner. First, assume that if you go with all this information with a knowledgeable, reasonable, informed third party, will they have same conclusion, which conclusion you are having right now? So think from their point of view, or simply go to a third party, inform them everything and take their opinion. Now, the qualification, that third party need not be a chartered accountant. It can be company secretary or reputed businessman or lawyers or any other professional. Now, how to address the threat? It is simple to address the threat. If it is not of acceptable level, either eliminate it, completely eliminate it, sell the shares, break the business relationship. So elimination. If elimination is not feasible, possible, go for safeguarding. Do such things that level of threat gets reduced to acceptable level. And that if that is not possible, decline the assignment straight away. So first try to eliminate. That's not possible, try to safeguard. And if that's not possible, decline the assignment. Depending on the situation, appropriate action needs to be taken. Now next is safeguards. So safeguards are things which we can do to reduce the level of threat, reduce the chances that compromise of fundamental principles will happen. So there is a shortcut: trap threats. That's wonderful. Trap threats. T stand for separate team. Let's have separate team for sensitive confidential information and separate team for other work, so that the principle of confidentiality is not breached. Then R stand for resources. Let's have more number of people. Let's give them more time. More number of people, more time. So if people work more, chances of compromising with the fundamental principle gets reduced. That is resourcing. Then one more R, review. Appoint a very good reviewer. He is knowledgeable, experienced, and he is not part of the team. He is coming out from outside. If such kind of review is done, there are less chances that compromise is done. Then appoint another firm. Another firm can be appointed to perform or re-perform any part of the engagement. That's wonderful thing. Again, chances that wrong things happen will get reduced. Partners for non-assurance services. So you can have different you can have one partner for audit assurance services, another partner and team for non-assurance services. By doing this, they will not influence each other. There will not be any conflict of interest, and it will greatly reduce self-review threats and other threats. The next is non-compliance with law, NOCLAR. So non-compliance with law and regulation, it simply guides chartered accountants what are their responsibility if they come across non-compliance. What is non-compliance? Non-compliance means if any action is against the law, or there is any inaction which was required by the law. So if there is any action or inaction which is in contravention of the law, then it will be considered as a non-compliance. Now, what is the professional responsibility? Because NOCLAR simply says that NOCLAR is applicable for chartered accountant in practice as well as chartered accountant in service. It explains what will be your responsibility if you come across non-compliance. What kind of preparators are covered? It covers non-compliance by the client or client's TCWG or client's management or client's employee. So there are 4 persons. In case of job, it covers non-compliance by the employer organization or the TCWG of the employer or management of the employer or employee of the employer. So in total, it covers 8 types of persons whose non-compliance is covered in NOCLAR. What about personal misconduct? It doesn't cover personal misconduct. It only covers those misconduct which are done during business activities during the course of profession. What kind of laws? So give examples of laws whose non-compliance will be covered by NOCLAR. So let's see. So there's a shortcut. SBI under FM department. S stand for securities markets, security markets and trading. So there can be non-compliance of security markets and trading related laws, non-compliance of banking and other financial products and services law, non-compliance with fraud, corruption, bribery laws, money laundering, terrorist financing law, then data protection law, environmental protection law, public health and safety law, and tax and pension liabilities. Tax and pension liabilities and payments. So there can be non-compliance about these laws. Then objective of NOCLAR. Objective of NOCLAR is to guide chartered accountants that when you come across NOCLAR, don't ignore it. Number one, be aware of what kind of principles, what kind of law, rules, regulations are there, what kind of principles you need to follow. And the principal responsibility to ensure compliance of law, rules and regulation and to prevent and detect non-compliances remains with TCWG and management only. It doesn't reduce their responsibility, doesn't transfer the responsibility. Certain important things, even NOCLAR is as NOCLAR gets applicable, it doesn't mean that compliance responsibility is shifted. TCWG and management is fully responsible for the compliance and for prevention and detection of non-compliance. You don't need extreme expertise of law. You need only limited knowledge of the law, knowledge which is required to execute your audit assignments. You don't need more expertise. Non-applicability exclusions does not cover, it doesn't cover all the matters. It doesn't cover non-compliances where consequences are when the impact is going to be inconsequential, very small, or it is a personal misconduct. So it doesn't cover all kind of non-compliances. Small non-compliances, it doesn't cover. Personal misconduct, it doesn't cover. No disclosure. NOCLAR is applicable. That means you need to go to authority for every small damn thing. It's not like that. In exceptional circumstances, when there's an imminent breach, and in professional judgment, reporting is important to protect public interest, then only disclosure may be required. So now next is applicability of NOCLAR. It is divided in two part. Applicability for chartered accountants in service, that is section 260, and applicability for chartered accountant in practice, that is section 360. So NOCLAR is applicable. NOCLAR is applicable to chartered accountant who are doing job in a listed entity and they are playing role of senior professional accountant. Senior professional accountant means they are either playing role of directors, officers, or employee who has significant influence decision making. That means key management persons. So it is NOCLAR is applicable only when they are playing senior professional role and not other roles. Then NOCLAR, in case of practice, if a CA firm is doing audit of a listed entity and net worth of that entity is 250 crore or more, then NOCLAR will get applicable to such CA firm only when they are doing audit. Only when they are doing audit, they are into audit engagement and not other engagement. So there's a limited applicability. Limited applicability. Then NOCLAR versus SA 250. SA 250 is very narrow. It is applicable only to audit of financial statements. On the other hand, NOCLAR, by the nature of NOCLAR, it is designed in such a manner that it is applicable. It is applicable to many. It is applicable when chartered accountant in practice is doing a lot of assignments and chartered accountant service is doing variety of jobs. So it is much broader as compared to 250. Then laws covered. SA 250 focuses on laws which has direct impact on business operations, business continuity and financial statement. On the other hand, NOCLAR covers different types of all the types of law which may have a major impact on the financial statements. All kind of laws. Stakeholder, SA 250 doesn't talk about stakeholders. NOCLAR talks about that chartered accountant see what is going to be the impact on different stakeholders like investors, creditors, employees, general public, and so on. Exceptional circumstances disclosure. So if there's a imminent breach of law, very big breach of law, so he should first discuss this matter with the TCWG and management, and he feel that in his professional judgment to protect public interest, it is important to go and inform regulatory authority. So he can do that. So NOCLAR says, yes, you can go and inform, but in exceptional circumstances, and definitely it should not be prohibited by law. NOCLAR cannot override law. Responding to NOCLAR, it is so it is for chartered accountants in job. It is divided in two parts: responsibilities for chartered accountants who are playing role of senior professional accountant, responsibility of the chartered accountant who are playing role of other employees. And in audit engagement, it is only responsibility of the accountant. What kind of steps? A rough overview. What kind of steps? First, understand the matter and its consequences. Then go and address it. Go and discuss with TCWG and management. For further action, you can go to the parent company or resigning. And if you're confused, go for the advice. Go for advice from the internal law firms, external law firms, icai. Take the advice and looking at the circumstances, you may think about going and informing to authority. Always understand, is it a imminent breach? Is it a very big breach? And then document things. Document things. You need to select appropriate authority depending on the circumstances, what kind of law is applicable, who is governing it, and then decide who is the regulatory authority. Documentation, you need to document understanding of what kind of non-compliance and what kind of consequences on all the stakeholders and what kind of discussions took place with whom, what is the management response to rectify no clause, what is accountant response, what kind of discussions, instructions he has done till now, how public interest is being protected, and document. So these things need to be documented, and these are documentation over and above which are required by SA 250, which talks about document what kind of non-compliance and what kind of accounting treatment, etc. is being done. Membership, it's very simple. Any chartered accountant can apply for membership. In form number 2, he will get registered, he will get certificate of membership, and registrar will maintain all the basic details: name, age, location, name, location, whether in practice or not, ACA, FCA, all this information will be within the register. Then section 8, disqualification. Professional accountant in ICU, that's the shortcut. So if there's a professional misconduct, if chartered accountant does something which is not as per CA Act, he will be punished with professional misconduct, and he may be removed. He may be removed from from membership. Then accountant, that is age limit. If he's not attained the age of 21, disqualified. Then I for insolvency. If the person is insolvent, he is disqualified. Undischarged insolvent, disqualified. Discharged insolvent but not having misfortune certificate, again disqualified. If he is convicted for criminal conviction, again disqualified unless it is pardoned or disability is removed by central government. For knowledge, we know that if someone is feeling that a liability is high, assets are go to the court and apply for it, and court will declare you insolvent. Then again go to the court and request that you take over my assets, sell it them off and pay off my liabilities. That is called discharging. So once that is then discharged, and then at the time of discharge, he may request, please give it in writing that this insolvency is not because of my mistake, but because of misfortune. My luck was not going good. So court may study it and may give misfortune certificate also. So court can declare a person insolvent, they can declare him discharged insolvent, they can, and apart from that, okay, they can give misfortune certificate also. Types of members, there are two types of member: associate chartered accountant, fellow chartered accountant. As you get registered with the institute, your name gets registered into associate chartered accountant. If a person is associate member plus continuous practice continuous practice in India for 5 years, then he can apply for FCA. If the person is just an associate for 5 years, not in practice, he need to prove that he has a knowledge and experience on the same lines like a practicing chartered accountant has, and then he can apply for FCA. He can write names AC and FCA in front of him, depending on whether he's an associate chartered accountant or a fellow chartered accountant. Significance of COP, it is given in section 6 of CA Act. It's a very simple thing. Who is a practicing chartered accountant? A person who is having COP from icai is a practicing chartered accountant, or the person is, or a chartered accountant is deemed to be in practice. We'll see this concept later. If any chartered accountant wants to do practice, it is mandatory to obtain certificate of practice from icai. If before commencement of this act, there were restricted certificate holders or registered accountants, they don't need COP because they already had permission. Person who is not in practice, person who is not in practice, is not having COP, should not do practice work. It is not allowed. Now, there's a very interesting concept. We discussed the case also here, that there was a lawyer. And he was doing tax practice. Then he completed his CA, got COP, and started working as a practicing chartered accountant. Then he was involved in professional misconduct, and because of professional misconduct, his COP was temporarily suspended, cancelled for 6 months. Then he asked CA Institute, can he practice tax as a lawyer? And the answer was no. CA Institute says that once you become member of the institute, you can do any CA related work only in one capacity, as a chartered accountant with COP. You cannot use other capacities. You cannot use other capacities to do CA related work. And so there's only one capacity. You cannot say that I am doing tax practice as a lawyer, cost practice as a cost accountant, legal practice as a company secretary. This thing is not allowed. So during this period, when his COP is suspended, he simply has to sit at home. He cannot do CA related work. If you take a COP, you need to pay annual fees, and if you don't pay that annual fees, your COP will get cancelled. Yes, cancellation can happen for different things. 4 things. If name is removed from register of members, that's very severe. COP will get cancelled. If it was obtained by giving false information, COP will get cancelled. If the person ceased to be in practice, it will get cancelled. Annual fees not paid, it will get cancelled. And upon cancellation, the person is supposed to surrender that certificate so that it should not be misused. But COP can be restored if the application is sent arrears is paid, arrear amount is paid. Again, COP charges are paid, additional charges, if any, are paid. If you pay additional fees, then the COP will be restored. And in that, if COP is cancelled because of non-payment of fees, if COP is cancelled, is cancelled because of non-payment of annual fees, then in that case, if the unpaid fees is paid within the financial year, that is before 31st of March, then COP, you will get the COP from the same date, the date on which it was cancelled. So there will not be any breach of continuity. Now, next is members deemed in practice. Members can be classified in two parts: members who are in practice and who are not in practice. Those who are in practice can further those who hold COP or those deemed to be in practice. It's a very simple concept to bring chartered accountant in domain of practice and apply all the rules, regulations on them. Members deemed to be in practice concept was developed. This will get applicable only. So this basically has list of activities. If any chartered accountant is doing this list of activities, he will be deemed to be in practice. But this deeming fiction will apply if the work is done for remuneration, received, or to be received. Let's see list of activities. So if a chartered accountant presents himself to everyone that he is a public accountant, that he is doing the accountancy work, he will be deemed to be in practice. If he sets up office, if he sets up an office for doing practice, he will be deemed to be in practice. If he offers services, accountancy services, he will be deemed to be in practice. Then, if he engages, if he does the work, definitely he will be deemed to be accountancy related work. He will be deemed to be in practice. In accountancy, majorly there are two things: accounting and auditing. So, but then other things are also there. Accounting work is doing consultancy, developing system, doing calculation, helping in selecting accounting policy, preparation of financial statement, that is accounting work. Auditing, any kind of examination or verification of financial data, statements, documents, financial statement, that will come in auditing. So if you're doing anything before accepting the work, three things are there: deemed to be in practice. If you're doing accountancy work, accounting, auditing, deemed to be in practice. Then apart from that, Section 2, subsection 2, clause 4 gives right to CA Institute that they can include more services in this list. So keeping that in mind, they have issued two things: Regulation 191 and then management consultancy and other services. Let's see what Regulation 191 says. Regulation 191 says, if a chartered accountant is appointed as a, so the big form is company as administrator of the company, administrator or arbitrator, or receiver by debenture holders, or by liquidator, these roles, or trustee of the trust, or executor of the will in case of individual. So doing all sensitive work, money related work, or acts as an advisor or representative of tax, finance, costing, or appointed by court, central government, state government, regulatory authority, or acting as secretary, again deemed to be in practice. But then if it is full-time come salary basis, these appointments, then deeming fiction won't apply. Then these deeming fictions won't apply. And one more thing, Regulation 191 is applicable only when you're working in professional capacity. That means contract is taken on your name. It should not be personal capacity, doing some work for friends, relatives, or charity. It should not be employee capacity, doing work for the employer. It should be in your personal in the sense you are doing it, then only we will consider it as a professional capacity. Now, what is significance of this list? First of all, those who do it, they will be deemed to practice. Secondly, chartered accountants who are already into practice, it gives them range, it gives them scope, range of activities which they can perform. Then last is two special things. If a chartered accountant is working under CA in practice or firm of CA in practice, he will be deemed to be member in practice for limited purpose to give him right to train article. And if a chartered accountant is working with armed forces, again he is deemed to be in practice, so that his behavior should be always ethical. Now, management consultancy and other services. Best part about this is council has decided it, and the best part is either this can be given in traditional form of proprietor or partnership, or you can make a company, management consultancy company for this, because this work can be done in two forms. They've excluded some services because these services are very sensitive and responsibility should be directly on the person. So they've excluded statutory and periodic audits. So that will not be in management consulting in other services. That means you cannot do these things in the form of corporate. So audits, statutory and periodic audits, then representation, advisory and representation in case of tax, and then the money related thing, administrator, arbitrator, receiver, liquidator, trustee, okay, uh, uh, and so on. So this money related sensitive work, again, they will not be covered in management consultancy services. Now let's see the list of management consulting services. So before incorporation, project company may need project reports, feasibility reports, that comes in MCOS. Then after incorporation, capital management, capital structure planning will be required, that will come in MCOS. Then once structure is made, then public issue related all the work, whether it is making prospectus or appointing people, networking, publicity, that will come in MCOS. Then acting as a registrar of shares, issue of shares, that will come in MCOS. Then once you got money, so first before incorporation something, post incorporation money raising, then after getting money, corporate planning, business policy, that will come in MCOS. Budgeting, making annual budgets, comparing with actual, that will come there. Then once planning is just staffing, creating organization structure comes in MCOS. Recruiting people, training people, designing incentive plan for them, that will come in MCOS. Then office work, doing administrative services, add people and asset management services, administrative services, GST practitioner services will be covered in MCOS. Then management, then working capital, then after production, working capital management, inventory management, management accounting, cost control, MIS, that will again, these things will come in MCOS. Market, then doing market research, pricing and decision making, and that will come in MCOS. Then acting as a recovery consultant only in banking sector, not agent, recovery consultant. Then at the end, making statements, profitability statement, that will come in MCOS. Then money management, financial management, investment counseling, valuation, valuation for merger and acquisition. This will come in MCOS. Broking, portfolio management, underwriting and broking. These three things will never come in MCOS. That means practicing chartered accountant cannot do it. If you want to do these things, leave COP, then you will be able to do it. And then at the end, special audits, M&O audit, quality audit, environment audit, energy audit, all these things, that will come in MCOS. Apart from that, others, IT services, insurance advisory, insurance brokerage services, insolvency professional, these things will also come in MCOS. Further, when we decide capital management policy, working capital management policy, financial management policy, feasibility reports, in this tax, analyzing tax implication is absolutely fine. No problem with that. Prohibited services. In Companies Act, there is section 144 which says that auditor cannot give certain services and they are called as prohibited services. Now, if he wants to give any service other than these prohibited services, prior approval of audit committee will be required, and if there is no audit committee, then approval of board of directors will be required. Now, these services cannot be given to company, its holding and its subsidiary. Let's see the list. Shortcut for the list is bad mafia. So B stand for banking, investment banking services. A stand for advisory, investment advisory services. D stands for designing, so designing financial information system. M stand for management services. A stand for actuarial services. F stand for financial, outsourced financial services. I stand for internal auditing. And then A stand for accounting and bookkeeping. Now, these terms, management consultancy and other services and management services, are not same. They are different terms under different acts, and there's a different year. Management services is in Companies Act 2013. Management consultant and other services is in CA Act, which came CA Act, and the amendment came in 2007. And there is no such clarification that both things remain same. And it is not good for the auditors if you equate both of them. So both are different terminologies. Then, as per section 25, chartered accountants cannot incorporate a company for giving accountancy services. So they cannot do CA practice in the form of a company, in company format. Okay. In fact, they cannot have a LLP with company as a partner to give accountancy services. So company cannot give accountancy services, and they cannot have a LLP with company as a partner to provide accountancy services. So there's a prohibition on chartered accountant. They cannot make company to give accountancy services, and they cannot have LLP with company as a partner for accountancy services. Okay. Now, further, but then if there's only LLP and there is no company as a partner, fine, that LLP can practice. That's absolutely fine. But then in that, audit work should be led and it should be signed by only that partner who is chartered accountant and he is in practice. Only chartered accountant and who should be in practice, only that person can lead the audit and sign the audit. If chartered accountants don't listen to section 25, they don't do things as per section 25, they'll be punished for 1,000 for first time conviction and 5,000 for second time conviction. Then we talk about section 7. Section 7 talks about three things. So just before the name, we add letter CA, that's called prefix. So it talks about prefix. Then below the name, we write designation, which shows what is our profession, what work we do, and below that we write other description. In this we generally write letters for our qualifications and membership of professional bodies. Generally these two things are written. Let's see what section 7 says about it. So first thing about prefix, any person who has become member of the institute can use prefix CA irrespective of whether that person is in practice or not. Further, if the person is having doctorate, then he can write the doctorate, that is, he's having PhD, then he can write Dr. CA or CA Doctor in any sequence. Now let's talk about designation. So if a person, in case of a practicing chartered accountant, only chartered accountant is allowed. No addition, no deletion, no substitution, no changes whatsoever. When it comes to person, chartered accountant who is not in practice, he can either use chartered accountant as designation or he can use anything else altogether. He has an option. Either use chartered accountant as it is or use something else as he feels, as he wants, it is suitable for him. Now, next is firm's designation. So if firm is having all the partners, if the firm is having all partners at chartered accountants and in practice, then that firm can write chartered accountants in designation. Now let's talk about other description. Other description is going to have two things: qualifications, letters indicating qualifications, and membership of professional bodies. If this very simple thing, if these qualifications or membership belong to accountancy bodies, it can be written only if there is a prior approval by ICAI, only if they have recognized it, and they have recognized CMA Institute. So we can write ACMA for Associate Cost and Management Accountant or FCMA for Fellow Management and Cost and Management Accountant. And so approval is given to CMA Institute, accountancy body, but letters indicating qualification membership can be written. And next is foreign bodies with whom we have MOU and MRA under section 29 of CA Act. So as on today, CMA Institute is approved and all the foreign institute with whom we have MOU MRA are approved. If you want to write qualification of and or membership of other bodies, that is other than accountancy bodies, then you can definitely write letters. You can definitely write letters indicating qualifications or membership. But there is one condition when it comes to qualification: it should be recognized by Indian law. Regarding qualification and memberships, regarding both, it should be recognized by Indian law. Now, the same thing which we saw in chart, it is given here. So, it should be recognized by Indian law. That's a very important thing. Next is merchant banker thing. A chartered accountant in practice can go to SEBI and get himself registered as category 4 merchant banker, and then start giving services for IPO. Can act as a merchant bank, start giving consultancy services and a lot of services for listing and public issue. In such case, in prospectus, below chartered accountant's name, we can write advisor to issue or consultant, advisor to issue or consultant to issue. But when it comes to visiting card and letterhead, only chartered accountant should be written. Then, when we talk about other description, it is only for qualification and membership professional bodies. You cannot go and write directorship of different types of companies, membership of political parties, or position in clubs like Lions Club, Rotary Club. You cannot write these things. Can we write letters for? Can we write cost accountant? Answer is no. We can write letters for CMA, that is ACMA or FCMA, but we cannot write cost accountant. We can write LLB, but we cannot write advocate. We can write BCom, we cannot write graduate. Then can we write qualification membership of foreign institution? Of course. We can write membership and qualification of foreign institution only if there is a MOU MRA with such foreign institution. We cannot write that we are tax consultant, GST consultant, DT consultant, finance consultants or secretaries. No, we have to write only chartered accountant. We can represent clients in front of lot of authorities, but we cannot write ourselves as corporate lawyer. We have to write simply chartered accountant. We cannot write CPA because CPA is not recognized by ICAI. Dual COP is allowed from ICAI, but it is not allowed by the other institutes. So as on today, we cannot have dual COPs. Further, ICAI said that even if there is a dual COP, at a point of time, either write chartered accountant or write other designation. Like when you are doing work of CA, you should have visiting card and letterhead of chartered accountant. If you are acting as an advocate, then in court of law, you can have designation only advocate. But then, as I said, it is not practical as on today. Let's talk about maintenance of branch offices. Chartered accountants in practice can have any number of branches they want, but there is only one simple condition: there should be a separate in charge for each branch, and this particular in charge should be a chartered accountant. Okay. Now, there is exemption to second office. If second office is in same premises, same building, same complex, same city, or within 50 kilometers from the municipal limit of the city in which the main office is, within 50 kilometers of the municipal limit, then this particular second office can be exempted. No need to have a separate in charge for such office who is a chartered accountant. No need to have a separate in charge. This exemption is only for second office. So you need to clearly declare which is the main office and which is the second office. Now there is one more exemption for firms which are in hilly areas. During the time of winter, they can open a temporary office in the plain region. For the maximum 3 months. They need to inform institute before opening at the time of opening the office. They need to inform institute when they close the office. There can be temporary board there, but it should be removed when the office closes. On visiting card and letterhead, only the original office's and name and address should come. Temporary office's address should not come. During the winter season, both the offices can work simultaneously, no problem. Further, the person who is in charge should have active association. So for requirement of active association, he should be either partner. Yes, he should be either partner of the firm, or he should be employee of the firm, either of them, full-time employee of the firm. Then for active association, either he should be further resident of the same city, or he should attend office at least for 182 days. Executive committee can give other conditions which prove that there is an active association. As on today, only this clarification is there. A member can be in charge of two offices if both the offices are situated in same accommodation. Yes, it is possible a member can be in charge of two offices if they are situated in same accommodation. Then when it comes to name board usage, at home CA should use nameplate of his own name, and you should not then use the name of the firm. Okay, so at residence have a personal nameplate, at office have nameplate in the name of CA firm. KYC norms have become mandatory for CA in practice. Every chartered accountant in practice should follow Know Your Client. I say made it mandatory for everyone for attestation assignments. Now, what do you mean by attestation assignments? Attestation assignments are going to include audits. If chartered accountant is in practice performing audit, or they are performing review, or they are performing agreed upon procedures, AUP, or they are going to perform compilation. So if they are going to perform these particular assignments, then they should follow KYC. They should know their clients. In case of consultancy assignment, it is not required, but it will be a good practice to have KYC. Now, what detail should be maintained for the client? That depends on nature of the client, whether he's an individual, whether he's a corporate, or whether he's a non-corporate like partnership firm. Suppose in case of, and broadly, three types of information will be required: identification details, business details, engagement details. So first, identification details: name of the individual, and for identification, PAN card or Aadhaar card. Then business description, last audited financial statements, and the type of engagement. If it's a corporate entity, name of the entity and its address. For identification, company PAN, company identification number. Also, people who run it, director's name and address, director identification number, and details, name of the parent company if applicable. So name of the company who run them, and if parent company who controls them. Again, business description, last audited financial statement, and type of engagement. Non-corporate entity, that means they're talking about partnership firm. So name of the entity and address, entity's PAN number, partner's name, address, identification number, PAN number, Aadhaar number. Then business description, last audited financial statement, and type of engagement. Now next, what do you mean by CA in service? So basically, chartered accountants who are doing job, they are called CA in service. CA in service. They may be doing executive jobs at senior level, or they may be doing non-executive jobs. They may be doing it in government sector, PSU, or they may be doing it in public sector. Either it can be a direct employment, or it can be on contract basis. Both the things are for chartered accountant in service. Let's talk about disciplinary procedures. It's a very simple disciplinary mechanism. If any person has a complaint against chartered accountant, or he wants to give information about the chartered accountant, then which leads to misconduct, wrong things, it should be given to disciplinary directorate. So disciplinary directorate will will make a prima facie opinion whether there is a professional or other misconduct, whether there is a misconduct. If he feels prima facie the person is guilty, chartered accountant is guilty, and if the misconduct falls in first schedule, then it will be sent to board of discipline. If the misconduct falls in second schedule or both first and second schedule, it will be sent to disciplinary committee. Now, if board of discipline, accepts the case, inquiry will be conducted, and if found guilty, punishment will be given. If rejects the case, matter will be closed. What kind of punishment will be given? If reject, the matter will be closed, or if on inquiry is not found guilty, again matter will be closed. Now, if found guilty, what will be the punishment? First, very comparatively simple thing, reprimand the member. Then bigger than that, impose fine up to rupees 1 lakh. Then bigger than that, name can be removed for almost 3 months, name can be removed. When it comes to disciplinary committee, when case is sent to them, they may accept it. If they accept it, again inquiry will be conducted. If found guilty, punishment will be, first is reprimand, bigger than that, impose fine up to rupees 5 lakh, bigger than that, removal of the name from membership permanently or for any duration. If case is rejected by disciplinary committee, it will be closed, or if found not guilty, then again it will be closed. If discipline directorate think that prima facie there is no misconduct, again case will be sent to board of discipline. Board of discipline will decide what to do with it. If they accept it, okay, it's not a prima facie case as per us, case will be closed. Or they may reject, they may send it back to director discipline to further collect the information, to further investigate the matter, may proceed with the matter on themselves, start inquiry, start collecting information, start taking action, or they can refer matter to disciplinary committee if it belongs to second schedule or both second and first schedule. If any member, if any chartered accountant, director discipline, if any person, any member, any person is aggrieved, director discipline is not happy with decision of board of discipline or disciplinary committee, then they can appeal within 90 days to appellate authority. Appellate authority is extremely powerful. They can confirm the order, they can modify the order, they can set it aside, they can reduce or enhance the penalty, they can send the case back to board of discipline or disciplinary committee, or pass such order as they may think it is fit. Now, types of misconduct. It's very simple, straightforward. Types of misconduct. There are two types of, so first of all, two types. Misconduct simply means unethical activity. And there are two types of misconduct: professional misconduct and other misconduct. So at the end of CA Act, there are two schedules, first schedule and second schedule. Both of them have parts. So first schedule have 4 parts and second schedule have 3 parts. Now, first 3 parts of first schedule and first 2 parts of second schedule, it gives list of activities. If these activities are done, it will be deemed that person has done professional misconduct while exercising his profession, while performing his profession. That's professional misconduct. Then first schedule, last part, part 4, and second schedule, last part, part 3, they're exclusively for other misconduct. If person does these activities, whether in professional life or in personal life, it will be considered as a misconduct. Because it is governing both professional as well as personal life, it is called as other misconduct. So basically, list is given. Majority of the list is for professional misconduct and the last part is for other misconduct. Now, apart from the given list, CA Act gives power. CA Act gives power to disciplinary directorate that they can go and collect any information, see anything, and if they feel that apart from matters given in the schedule, things which are done by chartered accountant are not good, they can declare his behavior, his activity as other misconduct. So when it comes to other misconduct, we have defined other misconduct under the last part of first and second schedule, and we also have other misconduct from past decided cases. So section 21 gives power to go beyond the activities given in the schedule. Now, so we have seen this, what is professional misconduct and other misconduct. We have seen how many parts are also there. Okay, so first schedule 4 parts, and second schedule 3 parts. So part number 1 is always big, 12 clauses, then part 2 2 clauses, part 3 3 clauses, part 4 2 clauses, total 19 clauses. When it comes to second schedule, part 1 10 clauses, part 2 4 clauses, part 3 1 clause, total 15 clauses, total 34 clauses. Let's see the shortcut. So first you can see Nargis, then you can see Paresh Rawal, then you can see Alia Bhatt, then you can see Prabhu Deva. These are 4 clauses. So Nargis is name. Who can work on behalf of name of CA firm, CA in practice and CA firm in practice. Then Paresh Rawal, paying share of the fees, to whom we can pay share of the fees. Alia Bhatt, accepting share of the fees. Then Prabhu Deva is about partnership. Then 4 cars, black color, that is Scorpio, white color Audi, brown color Duster, red color Camry. Scorpio is for securing work. Then Audi is for advertisement. Then brown color Duster is for designation. Then red color Camry is for communication with previous auditor. Then they visit 4 cities. Ranchi is for requirement of Companies Act. Firozabad is for fees. Bombay is for business. Bombay is for business and occupation. Then Shirdi is for signature, sign. Then first schedule. So 4 actor actress, 4 vehicles and 4 cities. So total 12. Then first schedule part 2. 2 movies, Ek Tha Tiger and Ashiki. So Ek Tha Tiger is for emoluments which CA in service gets, and Ashiki 2 is accepting money from others. Then part 3, you can see yellow color snacks, that is fafda, that is spicy. Then white color rasgulla, that is sweet. And then we can see tea. Fafda is about fellow chartered accountant, is connected with fellow chartered accountant. We'll see rasgulla. If you don't reply to CA Institute, is the misconduct. T, tender. You are given specific permissions under clause 6 and clause 7 to go and do good things, to go and apply in the tenders. Don't give false information. Then imprisonment, that is other misconduct. Shame on you, bring disrepute, that is other misconduct. Now let's see first schedule. First schedule part 1 is applicable. First 12 clauses are applicable to chartered accountant in practice. A person will be deemed guilty of professional misconduct if person or firm allows anyone else other than number 1, person who is a chartered accountant in practice, and he should be either partner or he should be either employee. So if you want someone to work in your office and represent you and give services directly to the client, that person should be chartered accountant in practice and then either partner or employee. If you allow someone else, you will be guilty of professional misconduct. This is there to maintain the quality. And now next is clause number 2. A chartered accountant practice will be deemed to be guilty of professional misconduct if he pays or agrees to pay or allows or agrees to allow any part of his revenue or profit to people other than prescribed. Basically, clause number 2 says that it should be shared with ethical work, and money should be shared with ethical people. Now, there is a pattern in clause number 2, clause number 3, clause number 4. First, we can pay share of the fees to partner partner related points, then member related points, and then qualification related points. So we can share our fees. We can share our fees with partner, retired partner, legal hire of the deceased partner, if it's given in partnership deed. So we can share with three types of persons which are connected with partner, retired partner, legal heir of the deceased partner if it is given in partnership deed. Then members, member of ICAI, that is chartered accountant, members of prescribed professional bodies. Prescribed professional bodies can be of two types: Indian professional bodies and foreign professional bodies. And then qualifications, person with certain qualifications. So now these services are for both within India and outside India. And when we talk about partners, there can be two types of partners. One, we can enter in with, one is Indian partner. Indian partner with whom we have done partnership. We have done partnership and he is a resident in India. So Indian resident partner, or it can happen that a foreign professional came to India, then under MOU MRA, he got membership of the CA Institute. Under MOU MRA, and now he has entered into partnership with us and he is residing outside India. So both will be covered, Indian resident partners and foreign resident partners, both will be covered in definition of partners. So as per clause 2, we can share our fees with three types of persons. You can say that three types of groups. First is partner and related people, next member and related people, and then qualified related people. Now, when it comes to partners, we can share with existing partner, retired partner, legal representative of the deceased partner. When it comes to member related, we can share it with member of the institute, member of the prescribed body. It can be Indian professional body, foreign professional body. When it comes to qualification, then people having prescribed qualification, whether services are in India or outside India. And partner will include both partner, Indian resident partner, and then foreign resident partners. Now, where are things prescribed? So we have regulation 53A. And it has three sub-regulations: sub-regulation 1, sub-regulation 2, and sub-regulation 3. Let's see. Regulation 53A, sub-regulation 1, it gives list of Indian professional bodies. It gives list of members of Indian professional bodies. And there are 5: member of cost and works accountant, member of Institute of Company Secretaries of India, member of Bar Council of India, member of Institute of Actuaries of India, member of Indian Institute of Architects. So we can share fees with members of these 5 Indian professional bodies. Then regulation 53A, sub-regulation 2 says that we can share fees with members of foreign professional bodies with whom we are having MOU MRA under section 29. Then 53A, sub-regulation 3, we can share fees with people having prescribed qualifications. So qualified cost accountant, qualified company secretary, qualified person having bachelor's degree in law, person who is qualified actuary, person having bachelor's degree in architect, and then bachelor's degree in engineering or BTech, bachelor's degree in business administration. So basically 5 are getting repeated, and then you have 2 new, BE, BTech, and then MBAs. So basically, what is difference between qualified and members? See, a qualified accountant, that means a qualified cost accountant, that means qualified cost accountant means he has completed the exams, but maybe he has not completed few more trainings and condition to get membership. Cooperative society audit. See, in some states, there is a circular that chartered accountants who are doing audit of cooperative society, part of the audit fees should be given as as contribution towards administration expenses. Council says that it's absolutely fine. It is mandatory sharing. It is not voluntary professional sharing. It is like tax. Such kind of sharing is absolutely fine. It is allowed. Now, a person was sharing 50% of the audit fees in the name of office allowance. Whatever is the name, sharing should be done only with limited set of people. Partner related points, member related points, and then qualification related points. Now, transfer of goodwill. If proprietor dies, or all the partners of CA firm die, then the new chartered accountant who uh, new chartered accountant who wants to take over the practice cannot share the fees, because new chartered accountant and persons who died, they were never the partners. So if a proprietor die, or all the partners die, in that case transfer of goodwill will need to be done. In transfer of goodwill, new chartered accountant will take over the practice and pay for the goodwill. Amount should be fixed. Either it can be paid in one stroke or installment, but amount should be fixed. It should be nowhere connected to profits. Okay. And when it comes to transfer of goodwill, time available is 1 year from the date of death. 1 year it will be kept in abeyance, it will be kept on hold, it will not be given to anyone. Time will be 1 year. If there is a dispute, then CA Institute should be informed of the dispute. Then the 1 year will start from the end of the dispute. So same thing is applicable if all partners die. Same thing, copy paste, same is applicable. If only one partner dies, then other partners can share fees with the legal representative. Share fees with the legal hire of the deceased partner, if such thing is given in the partnership deed. Now, next is clause number 3. Next, very interesting, is clause number 3. A chartered accountant practice will be deemed to be guilty of professional misconduct if he accepts or agrees to accept fees apart from limited limited number of prescribed people. Okay, so now who are these prescribed people? Again, on the same lines, just like clause number 2, only the thing is that partner related points are not given, because it is understood if you can pay, you can accept also. But then they have specified member related point and qualification related point. So member of the ICAI, that is chartered accountant, member of other professional bodies, it can be Indian professional bodies, it can be foreign professional bodies, and people having qualification. Everything is copy paste same like clause 2, except that the partner related points are not there. So whether referral fees, can professionals charge each other referral fees? Definitely yes. If I send client to you, I should get some percentage. You send client to me, I should give you some percentage. So referral fees is permissible, absolutely fine. No problem at all. Then we have clause 4. A person will be deemed to be guilty of professional misconduct if he enters into partnership in India or outside India other than the prescribed people. Again, in the prescription, you are going to find member related points, number 1, and then you are going to find people with prescribed qualification. Let's understand. When it comes to member point, on the same line, we can do partnership with member of ICI who is in practice. That's very important. Only with that person who is in practice. When it comes to member of other professional bodies, again, it is Indian professional bodies, it can be foreign professional bodies. But then there's a different regulation, Regulation 53B, Sub-Regulation 1, Regulation 53B, Sub-Regulation 2. And we can do partnership with people having prescribed qualification. For the same list, 53A, Sub-Regulation 3, the old list which is coming from Clause 2 and 3, same will get applicable. Same will get applicable. Now 53B1, list of Indian professional bodies. Then member of Indian Institute of Costs and Works Accountant, member of Indian Institute of Company Secretaries, member of Bar Council of India, member of Institution of Engineers, member of Institute of Actuaries, member of Indian Institute of Architects. So if you see that these membership is same as before, only one addition is there, member of Institute of Engineers or holding engineer degree from any university or recognized by law. So the list is completely same, only in member of Indian Institute of Engineers and the person of engineering degree is covered. When it comes to list of foreign professional bodies, it is exactly same. All the professional bodies with whom we have with whom we have MOU MRA under section 29, with them we can have partnership. Now there's a very interesting thing out here. Now sometimes it can happen that chartered accountants, foreign accountants, they come to India in MOU MRA, they become member of the institute, and they take COP, we enter into partnership with them, and they may go and reside outside India. So we have discussed that in partners we can have Indian resident partners or foreign resident partners, both can be there. Now, and when it comes to qualification, list is copy paste same. Qualification list is copy paste same. Okay, as compared to clause number 2 and 3. With the same people with prescribed qualification, we can enter into partnership also. Now, can we enter into partnership with CPA? Answer is no, it is not in the list. CFA, no, it is not in the list. What about multidisciplinary firm? As per clause 4 now, multidisciplinary firms are allowed, but practically it is not possible. CA Institute has issued guidelines, but other institute has not issued guidelines for its practical application. So multidisciplinary firms are not allowed as on today. Now, it's very simple. Clause number 5. Who can secure work for CA in practice? He'll be deemed to be guilty of professional misconduct if people other than partners or employees are securing work, and if they're using means other than that open for CA. So only partners or employees can bring work, can secure work, go and meet prospective clients, do discussions, give information, and convince them. Only partners and employee can do it for it. And they can use only means which are open for us. That means agents cannot be used, digital marketing agency, associates cannot be used, other means, bribe cannot be used, coercion cannot be used, blackmail cannot be used, taking loan and then offering services to settle the loan. This mode is also not allowed. Further, these partners and employees are supposed to follow. Clause number 6. They're supposed to follow clause number 6 and clause number 7. Both. Clause number 6 prohibits advertisements and clause number 7 prohibits advertising professional attainment. So while securing work, they have to keep these things in mind. Clause 6 says that a chartered accountant in practice cannot solicit, cannot attract, cannot get work directly or indirectly through 4 things. CIP. They cannot use circulars, pamphlets. Next, they cannot use advertisements like hoardings, newspaper ads, radio ads. They cannot use interviews. In interviews, they cannot ask for work. They cannot attract work. And they cannot go for personal communication with people and ask for the work. These four things are prohibited. There are two exceptions. They can always go to other CA in practice and ask for work. If they see tenders, they can always apply for the tenders, or people come with inquiries to them, they can definitely entertain their inquiries and resolve all their doubts. This is done so that chartered accountants in practice get work gradually as they become better and better. They have good reputation, they get more and more work. It is for this purpose advertisement is not allowed, and to protect independence and respect of the profession. Now there are a lot of clarifications of clause 6, and they form major part of the clause 6. So we have a shortcut. CA Tiger and CS Rabbit are current Bollywood PPE managers. So C is for clients of previous employer, T is for tender, I is for interview, G is for greeting cards, then E is for empanelment, R is for representation, C is for colleagues, S is for sponsorship, R is for roaming inquiries, A is for acceptance, B is for books, T is for teaching, C is for credit, movie credits, TV credit, C is for sanitary celebration, B is for box numbers, P is for press, P is for profile, E is for educational videos. Let's see. Clients of previous employer. Chartered accountant in practice cannot solicit, cannot attract, cannot convince, cannot try convincing, cannot go for convincing clients of the previous employer where he was working or working as an employee or as an article. Should not try to attract those clients. It will be considered professional misconduct under clause 6. Then comes to, you should not put any press advertisements, but then what is allowed if there are changes in the firm? If the name of the firm has changed, constitution of the firm has changed, address of the firm has changed, phone number has changed, then you can put that advertisement of those particular facts in the newspaper. You can also put a classified ad in CA journal or CA newsletter if you want to share your work. If you want to share your work and you want to ask people to join you as a partner or as an employee or on assignment basis, you can share details. You can give your name, your contact information, social networking site details, that's important. And you can also explain what kind of experience and expertise is expected. Okay, but then no firm name is allowed. Then empanelment. Chartered accountant practice can always apply for empanelment provided he knows that uh, such panel exists. He's aware about it. He should not go for roving inquiries. He should not simply send letters to many people and say that if you have a panel, take my name. If you have a panel, take my name. So if he's aware, he can do that. Then next, he should, if he can quote fees also, but then he should refrain from giving photocopies or cyclostate copies of the fees like a menu card. Then tender, he can definitely apply to tender, but then there is a guideline which says that if tender is in exclusively CA reserved areas, then he should apply only when minimum fees is prescribed. If it in other areas, if it is in other areas where others can apply, then don't look for minimum fees. You can directly go and apply. Then some important points regarding deposits, earnest money deposit, special deposit. Council says that they are not going to interfere in the deposit practices. If there is exorbitant deposit requirement, you can put a complaint to CA Institute. They will look into it in case to case basis. Whenever you apply for the empanelment, always maintain a cost sheet. Always have a cost sheet, how many people will be required, how many man-hours will be required, other resources will be required. Then only on the basis of cost sheet, you should always apply for tender. Then books. See, in practice can definitely write any book, any article, any presentation, and interestingly, he can give his name, he can give firm name also. Yes, he can give firm name also, but then professional attainment should not be highlighted. Now, when it comes to greeting cards and invitations, CN practice can send a number of greeting cards, he can send invitations also. But uh, first of all, they say that okay, you cannot use your professional status, designation, firm name on greeting cards and invitation. Then they allow. First, they allow in greeting cards. So festivals, New Year, birthdays, you can send greeting cards. Invitation, if it is for a religious ceremony first, then for opening of office, then wedding of that member, then change in office or telephone number. So four type of invitation details can be, professional details can be in, provided both these greeting cards and invitation are sent to relatives, friends and clients of that member only. So it should be sent to limited set of people. Then, if sanitary celebrations are silver jubilee, golden jubilee, platinum, sanitary celebration of CFM are happening, they're allowed to put a newspaper advertisement where they invite people for celebration. That is allowed. Chartered account practice cannot sponsor any event. Only sponsorship for program by POU, Program Organizing Unit of CA Institute, which is approved by CPE. So, continuing professional education programs can be sponsored. CSR programs can be sponsored. Since CSR program only use prefix, you can never use, you cannot use firm name and CA logo in CSR in activities. When it comes to teaching, yes, if you are doing teaching, it should be as per clause 11 and regulation 198. Fine. You should take proper permissions under clause 11, and regulation 198. And then you can teach. But then your name should not be there in the advertisements of the coaching classes. Advertisement of coaching classes, because it will lead to indirect solicitation. In fact, so no name should be given in hoardings, pamphlets, anywhere. Further, signboard can be there, but in signboard, name of the coaching, contact and subject should be given. Again, CA name should not be given. So name of CA should not come in advertisement. It should not come in signboard also. Don't share profile even to prospective client. Whenever you meet prospective client, whatever information he asks for, give it to the person. If he asks for profile, then only give to the person. Don't share on your own profile immediately. Then credits. When it comes to movie credits or television credits at the end, then firm name is allowed. Firm name is allowed, but it should be shown in a same manner like other credit. It should not be displayed differently. Roving inquiries are not allowed. Through letters, emails, roving inquiry are not allowed. You can definitely go to your other professional colleagues and ask for work. You can have personal visits, personal communication, SMS, WhatsApp, emails. That's fine. You cannot do mass media communication, like you cannot go to newspaper, or you cannot send circulars to everyone. You cannot go for advertisement, or you cannot send circular to the whole city. When it comes to representation, you can definitely, a chartered accountant who is removed from his post has right to send representation. But then in representation, he should prescribe, he should first of all explain that he can explain three things. He can explain he was independent, then he worked very carefully, diligently, and then whether he is willing to continue. You should not write, you should not do publicity of your work. If you do publicity of your work, you have designed this, you have designed that, you have designed controls and all, that is not allowed. Acceptance. So if you are getting work from a contact which is introduced to you by another chartered accountant in practice, then you should not directly accept that work. You should ask client to come through the original CA. Come through the original CA. Work should come through him. It should not come directly. So there should not be betrayal. Everything should be done openly. in keeping the original, keeping the CA who introduced us in loop, then we can definitely go for interview in TV, radio. Apart from our name, firm name should be there. We should give the information which is asked for. We should not asked for. We should not. It should not lead to highlighting professional attainments. We should not ask the anchor to highlight our professional attainments. Box numbers. It is box number is nothing but PO box number. You cannot put advertisement newspaper and say that anyone wants services can contact PO box number. Chart account practice can make educational videos, that's fine, but then no firm name, no website address, no contact detail should be there in educational videos. So under clause 7, a chartered accountant is guilty of professional misconduct if he is doing two things. He is advertising professional attainments. He is advertising, highlighting professional attainments. And second, he is using any designation or expression which is other than chartered accountant. So if he does any of these two things, he will be guilty of professional misconduct under clause 7. So that is the broadly two things they are saying. And the exemption or exception is write-up. Yes, exception is write-up. We study more about it when we see guidelines related to write-up. So you can use simple piece of paper on which your details and details of services are given, and that can be used to advertise your services. Okay, we'll study more about it when we see guidelines on write-up. So basically this advertising professional attainments is prohibited, that we have seen. You cannot advertise, you cannot use any other designation, but definitely you can in other description you can write letters of qualification or membership of other professional bodies. If it is recognized, you can definitely do that. And then there is a exception to write up which we see in detail when we see guidelines related to write up at the end of the chapter. Now let's see. So there are clarifications of clause 7. Drop negligent, frustrated, questionable classmate. Let's drop him. So D stands for directors. So there is a clarification regarding highlighting professional attainment of directors. Then there is a clarification R for how you can publish reports and certificates. Then O for can you use other designations. Then what can you put in press. And if you are a network of CA firms, then there is a clarification with respect to that also. Then how can you use name of firm, if you can use firm name. Then there are clarification for qualifications, then common logo of CA. Then C for can you use designation company secretary. Then can you have your own logo. Can you use designation advocate. If you are appointed at a significant position, then what kind of things you can do. Then signboard, what kind of signboard you can have. Then regarding members of CCM, central council members and regional council members, RCM, can you write articles and then training courses. Then can you go in electronic media. So let's see. So these are the clarifications. It's a shortcut, and then let's see clarifications one by one. Let's talk about other designation. Okay, we cannot use service wise designation as tax consultant, GST consultant, cost consultant, not allowed. We cannot use political designation, member of parliament, member of legislative assembly, municipal councillor. We cannot do that. We cannot call ourselves corporate lawyers. No, not allowed. But definitely we can call ourselves insolvency professional and registered valuers. So we cannot use other designations. Nothing. No service wise, no political designation, no corporate lawyer. But there are exceptions because they are very popular and they are recognized by law. Then when we talk about qualifications, so in qualifications they are clarifying with respect to foreign institutions. If CA institute is having MOU or MRA with any foreign institute, then qualification of such foreign institute or membership of such foreign institute can be given in other description. There is a very important practice date we cannot put, so this practice date, we cannot put, that is not covered in the shortcut. We cannot put date of setting up of practice on our visiting cards or on letterhead. That will be considered highlighting professional attainments. That is not allowed. Then we can have dual COP of chartered accountant, and we can have COP of LLB also, but we should not use designation together. When you are doing CA work, use designation chartered accountant. When you are doing legal work, use designation advocate. This is allowed from CA Institute, but practically it is not allowed by Bar Council of India. So having dual COP is not allowed as on date. Then we cannot, same as we have discussed about advocate, same thing is applicable to practicing as company secretary or CMA. CA Institute has allowed having dual COP. Don't use designations together. And if you do that, still you will be considered full-time practice, not part-time practice. You will be in full-time practice. Okay. But then again, it is not allowed by Company Secretary Institute and Cost Institute. So it is not practical. Then firm name should be given only on professional stationery. That means visiting card, letterheads, signboards. That's it. It should not be used. It should not be used anywhere else. Don't use firm name. If you want to use, you can definitely have prefix CA. Then when we talk about press, you can definitely go to press. You can definitely go to press. You can give if there is a you can go to press if there is a success of a candidate in CA exam. You can give the basic details: name of the person, which exam he cleared, what kind of rank he achieved, then who was the principal, and then the firm name. That is allowed. You can give basic details, and it can be published in local newspaper where the firm is situated. But please, no unreasonable publicity, no highlighting professional attainments. Don't misuse this particular permission given with respect to success of the candidate. Then we talk about reports and certificate. It's our responsibility to prepare reports and certificate and give it to the client. So we are going to do that. Give it to the clients, and that is absolutely fine. Now, so prepare. It is a professional responsibility to prepare proper reports and certificates as per legal requirements, as per applicable standards. Then it should be given on the letterhead. So making it is our responsibility. Giving it on letterhead is again our responsibility. Then these reports and certificates should be given, should be distributed as required, as per the purpose. See, in engagement letter, it will be given to whom these reports and certificates should be given, and it should be given to them. But don't unnecessarily print it in bulk, in huge quantity, large quantity, and circulate them so that you can get more awareness. Please don't do that. Don't do that. Don't misuse reports and certificates. Should restrict publication of reports and certificates to what is necessary. The extent of publication can influence the public's personal choice, so they should be mindful. Don't publish it so much that you try to gain publicity out of it. Then electronic media. Definitely we can appear on electronic media. We can go on televisions, we can television, films, internet, radio broadcast. Absolutely fine. We can go and appear. Whenever we appear, we can go and appear as chartered accountants. That is absolutely allowed. We can go in these programs, and then we can be identified to have specific knowledge, special qualification, special knowledge in a suppose field of income tax, field of GST, audit, finance, accounts. Definitely. So we can be called expert of particular field. Firm name can be given. Extremely important. Firm name can be given, and we should give unbiased views. But definitely it should not lead to promotions. Go and appear, absolutely fine. Absolutely fine. And people will call you specialist in particular field, absolutely fine. Firm name, absolutely fine. but don't try to highlight professional attainments. Okay, don't try to promote yourself. Then sometimes in some boards, some societies, boards, you will be appointed, and in the process, a lot of publicity will be done. That is absolutely fine. Okay, you can definitely say that you are a chartered accountant. Don't use firm name again. Don't use firm name. No reference to the firm. Your name can be there, and then giving name is absolutely fine, guys. That's no issue. That's not the issue. That's not the problem. So if you're appointed, you can call yourself chartered accountant, but don't use firm name. You can go for trainings. You can go trainings, no problem. You can give training to your own staff. You can give training to the staff of other chartered accountants in practice. Absolutely fine. You can have your material also, but they should not be overemphasized on your name or your branding. It should not be used as a branding exercise. You can definitely write articles. Letters. That is absolutely fine. Okay. We have clause 6 also on articles for articles and books, and there we have specified firm name is allowed. So here clause 6 and clause 7 both are talking about it. You should mention both, and you can also mention clearly in clause 6 writing firm name is allowed. Okay. Then we talk about signboard. It's members' choice, discretion. It's his choice, it's freedom, what kind of signboard they have. But then there are restrictions. Don't use glow signboards or very large size board as used by traders. You have discretion. You can have your own taste. You can have your own. Just ensure that it is of good, normal, reasonable size, and it is illuminated. There should be light on it. But then avoid glow signboards. Avoid large size boards, and then at residence have your individual's board and not the firm's board. Then when it comes to directors, chartered accountants can be appointed as directors, absolutely fine, and their public announcement. But then if the public announcement, chartered accountant need to ensure there's a compliance of 6 and 7. So you should always talk to the company and ask them to send the material which they're going to publish, and he should see that there is no non-compliance of 6 and 7. It should not result into highlighting professional attainments or soliciting work. Always approve the content which will be published by the company. Network firms, CA firms can come together and they can form network. But then even network will be bound by the requirement of clause 6 and 7. They are supposed to follow clause 6 and 7 and their clarification. Chartered accountants cannot use their own logos. Chartered accountant practice cannot have their own logos. They cannot use it. Okay, because people were misusing it. So you cannot have your own logo or monogram. You can use only common CA logo. Only common CA logo, blue color border, white color background, and chartered accountant, and then your reverse tick is allowed, and all the colors represent positive things. That's it. Members of regional council and central council can have their cards for CCM and RCM. They can give details. They can give their details, contact details, address. On the back side, they can give contact details of their home or their office address but the firm name should not be there. So the important thing is backside they can have address of the office or address of the firm, home or office address, but the firm name should not be there. Then we have clause 8. And it says very simple thing. The chartered account will be deemed to be guilty of professional misconduct if it doesn't communicate with the previous auditor before accepting the assignment. It's very simple. Whenever an audit assignment is offered, it is responsibility of chartered accountant in practice that he should first communicate with the previous auditor. Wait for reasonable time, and then only go and accept the assignment. This is applicable when previous auditor is a chartered accountant. Chartered accountant or certified auditor or restricted or certified auditor, either of them. Certified auditor is an old concept before CA Act 1949. Before CA Act 1949, just use chartered accountant. That's it. Sorry. Certified auditor is a very old concept. So communicate only when the previous person is a chartered accountant. It's a courtesy. It's for the courtesy. Definitely, it's for professional courtesy. Do you have any objection? And you should also know the reason. Okay. Clause 8 is nowhere intimidating or stopping client from changing the auditor. They have all the right. They can do it. But then to protect rights of the previous auditor, it is very important that communication should happen with him. Okay. Now, the other person, the retiring auditor may communicate back and may give reasons why we should not accept the audit assignment. So what could be the reasons? There can be broadly 3 reasons. First, in communication, retiring auditor may say that there is a non-compliance of section 139 which deals with appointment and section 140 which deals with removal and resignation. So if he says that there is a non-compliance with 139, 140, don't accept the assignment. Next, if he says that undisputed audit fees is not paid, if undisputed audit fees is not paid, don't accept the assignment. If he talks about that qualified report was given, so in first 2 cases, simply don't accept the assignment. In third case, see who is right. If you see that the retiring auditor is correct in his approach, don't accept the assignment. But if you feel that client is correct in the approach, you can go ahead and accept the assignment. Now, let's further go into the details. What do you mean by undisputed audit fees? Payment of undisputed audit fees. Suppose, very interesting thing. Suppose retiring auditor, previous auditor is not available to accept the payment of undisputed audit fees. Ensure that a demand draft is prepared in the favor of retiring auditor. Verify the same, and then you can go ahead and accept the audit. Okay, because the problem is with the previous auditor. He is not available to accept the payment. What do you mean by undisputed audit fees? Provision for audit fees which appears on balance sheet, financial statements, and which is signed by both auditor and the auditee, that will be considered as undisputed audit fees. Then we have discussed about qualified report. We have to see who is correct, and accordingly we need to decide whether to accept the assignment or not to accept the assignment. Now, change procedure is very simple. So whenever client comes and offers the assignment, first ask the client, have you informed the retiring auditor? If not, then it is little suspicious. Why you have not informed the previous auditor? Ask for the reason for change. Okay, and inquire. Always ask whenever there is a assignment is offered where the previous auditor is informed about it, and what is the if not, ask reason for change. Consider both the things, and it is healthy practice not to accept the assignment. It is recommended, but it's absolutely fine if there is no valid reason. See, first we asked whether have you communicated with the previous auditor. They said no. We asked for the reason. There is no valid reason. Healthy practice, don't accept it, but it is a recommendatory thing. Even if chartered account accepts it, it should be absolutely fine. If there's a non-response from the retiring auditor, wait for reasonable time period, and then you can go and accept it. Always, whenever you communicate with the previous auditor, you should have positive proof of delivery. only going through certificate of posting, sending a normal post under certificate of posting, you get a simple certificate that posting is done. That doesn't give you positive proof of delivery. It has been decided in the case law that doing a simple post is not sufficient. There should be positive proof that delivery has happened. So what methods are allowed? What methods are allowed for communication? Go for hand delivery and take acknowledgement that it has been received by the firm retiring, or it has letter is received from the received by the retiring auditor. Go for RPAD, registered post acknowledgement due. It's a special service in which a postcard is signed by the receiver and it comes back to the auditor. So RPAD is allowed. Email is also allowed. Email acknowledgement is also allowed, provided you have you should put a mail and you should get an email as an acknowledgement, provided it is coming from registered email address of the auditor, of the previous auditor or last known official email address. So if you get acknowledgement is very important. Hand delivery and acknowledgement is required. RPAD, you get the acknowledgement back. You send email, you need email acknowledgement. And communication can be done through Udin portal, but it is not yet activated. If you get to know that, if you get the letter back that office is found locked, it will be considered as delivered. Or if you get the message, no such office exists at this address, but then when you have used proper address as per the institute's website, again it will be assumed that it will be delivered, unless proved that something is wrong with the courier, with the delivery, it was not properly offered. So office found locked, assume delivered. No office exists such error, assume it is delivered. In case of income tax, special audits are done. When a special auditor is appointed, generally there is no previous or retiring auditor, so no need to communicate with any previous auditor. But then it is a healthy practice. In case of special audit, it is a healthy practice, recommendatory practice, that communication should be done with the statutory tax auditors. This is applicable to all types of audit: tax audit, GST audit, statutory audit, inter audit, concurrent audit, energy audit, environment audit, all kinds of audit. It's applicable when the post is held by a chartered accountant. It's not applicable, it's held by others like CMA or graduates, then it is not applicable. Then if other professionals, we are not supposed to communicate, but it's a healthy practice. In case of government audit, in case of government audit, if there's a tight time schedule, and in that a chartered accountant, a CA in practice is appointed, then again chartered accountant has to communicate before accepting the offer. But then he doesn't have to wait for a reasonable time, because it's a tight time schedule. He will give conditional acceptance, that I am accepting subject to what communication I receive from the previous auditor. They can go for conditional acceptance only in case of government audit, where there are time constraints. Now, unique cases, we discuss this in the next lecture, but I am covering in this audio only, that if no tax audit is conducted for past few years, then you go to the last known tax auditor, whether it is 2-3 years back, it's absolutely fine. If there's a death, just ensure that death has happened, ensure that no need to do communication. Under clause 9, whenever a chartered accountant in practice is offered company audit, he should always ensure that there is a compliance of section 139 regarding appointments and section 140 regarding removals and resignation, and then only he should accept it. If he is not checking compliance, he will be guilty of professional misconduct. In clause, they use old sections of Companies Act 1956, but council has notified that we are supposed to see new sections, that is section 139 and section 140. Always check this appointment validity so that there are no disputes in future with the previous auditor or other authorities. Now, CA Institute has issued guidelines what to check what kind of documents to check in case of first auditor, subsequent auditor, casual vacancy auditor, joint auditors, and what special things when the new auditor is appointed. Okay, so guidelines are issued. Now these things are not very important, just have overview. Now we need to ensure that section 139 and 140 are complied with. Section 140 is removal and resignation. Here they have given procedure for removal of auditor at AGM under section 140 subsection 4. So what is the process? Very simple. First, a special notice is required from members to the company that we want to remove the auditor. Then the copy of special notice will be sent to the retiring auditor. Then retiring auditor can send a representation, explaining how he has done the audit and whether he wants to continue. Then members will be notified with both the things, that a special notice for removal and representation from the auditor. It will be circulated to all the members, and finally general meeting will happen. If resolution is passed, auditor will be removed at AGM. And if it's not passed, removal won't happen. Only certificate from management that removal of the previous auditor is proper and appointment of the new auditor is appropriate is not sufficient. Just taking certificate from them is not sufficient. He is supposed to go and see documents to confirm that the removal was proper of the previous auditor and the appointment is appropriate. If they refuse to give documents, refuse to allow him to review the necessary documents, then he cannot accept the assignment. He can accept only after verifying whether the removal resignation of the previous auditor was appropriate and the appointment of new auditor is appropriate. Then only you can go for it. Now the guidelines are here. If it's the first auditor by board of directors, then see the minutes whether board of directors appointed the auditor within 30 days from the date of incorporation. If first auditor is appointed at general meeting, again go and see the minutes of the shareholders meeting, whether proper resolution was passed within 90 days from the end of the 30 days. In case of casual vacancy, go and see whether board of directors have whether board of directors have appointed auditor within 30 days. In case of resignation, again go and see whether proper board resolution was passed and auditor was proposed within 30 days and whether such appointment was approved by shareholders in general meeting within 3 months. In case of removal before AGM, ensure he was given opportunity of being heard, and then board resolution was passed, then central government was informed, approval was received from them, and then special resolution was passed within 60 days. So verify things which are required as per Companies Act. Now, in the whole process of removals, resignation, and the new appointments, a lot of communication happen. So document servicing should be as per the requirement of Companies Act. So if you want to service any document to the company and its officer, so it should be if it is sent to registered office through registered post, speed post, courier service, or by leaving at registered office, it's absolutely fine. It will be considered serviced. So if you send it to the registered office through these medium, it will be considered serviced to company or officer. In case of notice to retiring auditor that a proposal is received to remove you, registered post acknowledgement due should be used. So ensure that documents served to company officers and auditors in effective manner. That needs to be checked. Then after that, ensure that take the minutes. If you want to check what happened in the meetings, go and see the minutes. If the adjourned meeting, that's fine. Meeting can be adjourned and then see that in the adjourned meeting you continue with the agenda you had. You cannot have special notice in between for the adjourned meeting. Now, unjustified removal. So we have ethical standard board, and ethical standard board is supposed to supervise and have oversight of what kind of removals are happening. And if there's an unjustified removal, then take corrective steps. So for this, so whenever auditors are changed, but they were not willing to continue, suppose they resign or they don't offer themselves for reappointment, then they should send reasons to board of directors, and they should send it to the CA Institute also. That's important. So whenever you resign or you don't want to get reappointed, even CA Institute should be informed, and the incoming auditor should read it. If auditors are willing to continue, they send letter of representation. So letter of representation should be sent to the institute also. Again, incoming auditor is supposed to read it. So basically, ethical standard board is there. If auditor is not willing to continue, reasons automatically reach institute. Is willing to continue, letter of representation will reach institute, and incoming auditors always should take this communication, read it carefully. Ethical standard board should review all these communications, and if they feel that there is some unjustified removal, it should inform to the council. Same procedure is applicable even in case of government removals also. Then we have very simple, straightforward clause number 10. A chartered accountant will be guilty of professional misconduct if he offers or charges if he charges or offers to charge fees which is percentage of profits, or it is contingent percentage of profits, or it is contingent upon the results of the assignment. Okay, so fee structure, there's a restriction over the fee structure. It should not be profit based, it should not be contingent. But then if exceptions, CA Institute, council can always make regulation and give exceptions to this general rule. So why this is done? Yes, we want to earn profits. We want to earn profits as a profession. But then payment structure should not be such that chartered accountants are pressurized to do wrong things, illegal things, inappropriate things, and so protect integrity and independence. Exception, if the fees is to be decided by court or public authorities, then it is not considered contingent. If it is given that if in assignment it said that fees will be decided by court or public authorities, it is not considered contingent. And then there is regulation 192 which explains in which circumstances you can go for percentage basis. So let's see. So we had a short story. Allu Arjun is taking certain management consultancy services, then he registers cooperative society, takes certain financial services, then he goes for financial desk, then after production he goes for cost optimization services, after sale he goes for debt recovery services, and then once he has earned a lot of money goes for asset valuation or direct tax and duties. Then after losses he goes for liquidation and receiving services and any other services prescribed. So in first of all, when we say certain management consultant services, there is no such list till date, so percentage basis cannot be charged. When we say certain financial services, again there is no list till date, percentage basis cannot be charged. Rest everywhere percentage basis can be charged. Insolvency professionals can charge on percentage basis. If you are serving non-audit client, non-assurance services, apart from that, those we have discussed here, then percentage basis is absolutely fine. Clause number 11, clause number 11, chartered accountant in practice cannot go for any other business or occupation. except as allowed by the ICAI regulations. He cannot go for any other business or occupation. So there's one exception as allowed by the regulation, which we are going to see. And next, he can become director. He can become director, non-executive part-time director in a company, provided he or his partner should not be auditor. Otherwise, there will be conflict of interest. So there are professional restrictions. You don't go for any other business or occupation unless as allowed by the council. And then you can become simple director, provided you or your partner is not auditor. There should not be conflict. And rationally simple, focus on one thing, focus on your practice, give quality services. When you enter into other businesses or occupation, you may lose dignity, and you may use other business or occupation to become famous for publicity. So that's why they have not allowed it. We have regulation 190A, which has given two types of list for general permission. So that means there's a list of activities which you can do under general permission without prior approval, and then there are list of activities which you can do under specific permission, that means after prior approval. Then regulation 191 we have already seen. In company you can be along with CN practice, can do work which is very sensitive, money sensitive. So in company you can be appointed as administrator, arbitrator, receiver, liquidator. In trust you can be appointed as trustee. In individual you can be appointed as executor. Then these things are allowed. So you can go and do these things. This is allowed. Or you can be appointed. You can be appointed by court, or central government, state government, by authorities, by regulatory bodies, authorities, or you can be appointed as secretary. Then doing these are also allowed. But it should not be salary come full-time basis, or salary come full-time basis, or representative in costing, tax, finance matters. Absolutely fine. Okay. So these things are also allowed. A chartered accountant in practice can do money sensitive work, and appointment by important set of people. Both things are allowed. When we talk about general permission, shortcut is special PACE. S stand for you can become surveyor, loss assessor for insurance company. P for you can go for private tutorship. You can go for education, attending classes or examination. You can go for commission. You can go for commission. You can get commission, renewal commission. You can go for commission. You can get renewal commission. You can go for tutorship, part-time tutorship with ICAI for ICAI courses. You can go for authorship of books and articles. You can you can go for legal roles and responsibilities, MNP. You can go for magistrate, special executive magistrate. You can go for peace, justice, peace. You can become notary also. So these things can be done. Let's see second part of the shortcut, and that is PACE. Chartered accountant in practice can go for politics. He can become MP, MLA, MLC, municipal councillor, but definitely cannot use designation under clause 7. Then A for he can go for agriculture, provided he's owning that land. Then he can go for agriculture activity also. He can go for consultancy. He can become recovery consultant in banking sector. Then he can go for charity. Okay, so he can go to he can work for charitable. He can work for a charitable organization. Charitable education, charitable organization can be in education or any other field. If he is going for honorary office, so go and work in the charity on honorary basis, it's absolutely fine. It can be education, it can be other. Then C again, so there are 3 C's. Chartered accountant practice can go for job. Yes, along with COP, you can go for job and job under other CA or CA firms. Then go for examination. All the roles related to examination, whether it is setting up papers, then evaluating papers, becoming moderator or head examiner for any exam. It can be a science stream exam. Then can go for editorship. You can become editor of professional journal. Then chartered accountant in practice can take specific permission, that means prior approval, and do more things. Shortcut is beat langur on fence. Beat langur on fence. So B stand for business. Yes. Chartered accountant practice can go and do job in a business. After taking approval, he can go and do job in the business. There's only one condition, that there should not be substantial interest. His or his relatives' substantial interest should not be there. Otherwise, there will be conflict of interest. Then educational interest. Yes. Chartered accountant in practice, after prior approval, they can go and work with educational institutions. He can have educational interest, that means can be chairman, governing body member, or principal. Okay, that is allowed. So take permission and work in educational institutions for remuneration. If you're working on honorary basis, that is general permission. If you're working for money, that is a specific permission in educational sector. Then additional occupation, be it A for additional, apart from things which are given here. If you want to go for any other business or occupation, you can go and apply to executive committee, and if you give valid reason, they may allow it, but they rarely allow it. Then it comes to tutorship. If you want to go, be it T for tutorship, if you want to go for part-time, full-time tutorship under any under educational institutions, under any educational institutions, and not CA institutes, coaching organization, if you want to go for them, then a specific approval, after you can go for that only after specific approval. Then if you want to go for lectureship of courses conducted under the premises of the CA institute, but then other than the courses and exam conducted by the CA institute, you can go for foreign courses or other things. Again, if you want to go and teach that, like do lectureship, prior approval is required. If family business get devolved over chartered accountant, and if he proves that he is not actively involved, so after taking prior approval, he can go for family business in his name. He need to prove that it got devolved, he is not actively participating in conducting the business. Beat langur on fence, E for editorship. After taking prior approval, he can go for editorship of non-professional journals also. Then N for, after taking approval, he can go for job in non-business entity also. Job in non-business entity also after taking approval. Okay. So in charitable organization. Then C stand for corporate leadership. He can, after taking approval, he can become managing director or whole-time director, but then there's a prior condition that he or relative should not have substantial interest, okay, in that particular company. There should not be substantial interest. Council is open, they can refuse to give permission for any of these things, okay, if they don't find it appropriate. Relative means, okay, husband, wife, brother, sister, all lineal ascendant, all lineal descendants. When we talk about substantial interest, it is 20% or more, or voting powers in case of corporates, 20% or more in case of non-corporates like Non-corporates like partnership firm. When we take substantial interest, take holding of the chartered accountant, take holding of the relative, and all the concerns entities on which relative is having substantial interest. If you want to become MD whole-time director, a prior approval, after taking prior approval, you can become MD whole-time director, provided there is no substantial interest. And a person will be deemed to be MD or whole-time director, if a person is entrusted with all the management responsibilities. So there will be deeming fiction also. Now, director related matters. If a chartered accountant wants to become director simpliciter, that means non-executive director, part-time director, just attending meetings, not getting any remuneration, then that is allowed. That is allowed in clause itself. That is allowed in clause itself. Just ensure that chartered accountant or partner is not auditor there. So there is only simple requirement of that is covered in the clause itself, irrespective of whether they are having substantial interest or not. That's not going to matter. So the condition of substantial interest is only for MD and whole-time director. Then further, auditor of the subsidiary company. See, auditor of that company cannot be director of that company. But then auditor of the subsidiary company cannot be director of the holding company. So they have further clarified. This is done to protect independence of the auditor. Can you become promoter of any company? Absolutely fine. Can you become a signatory? Yes. Can you become promoter director? Absolutely. Till the time you are director, simple director, it is absolutely fine. Okay. But just ensure that you are not doing CA practice, CA accountancy practice in corporate firm. That is not allowed. And you are doing activities which are allowed. Only those activities should be done as a director. So you can definitely go for direct. You can become promoter, signatory. You can become director, simple director. Absolutely fine. It is allowed. Then, as we have discussed, that if after taking prior approval, you can continue to hold family business in your name, but it has devolved because of partition or inheritance or succession plan. To prove you don't have active involvement, to give declaration that you fulfill all the conditions. You can act as a karta also. That's absolutely fine. When it comes to teaching limits, we already know regulation 190A. Under general permission, there is a private tutorship or part-time tutorship at CA Institute. Under specific permission, there is a tutorship under education organizations or lectureship under CA Institute for courses other than CA. So that is allowed. So some things are allowed in general permission, some things are allowed in special permission. But then teaching hours should not exceed 25 hours per week. If it exceeds that, then part-time COP will get applicable. You cannot be able to sign reports and certificates, financial statements. You won't be able to train articles also. You will not be able to train articles. We have seen this part-time COP. So a chartered accountant can be into full-time or part-time practice. Part-time practice means cannot attest, sign reports, certificate, financial statement, cannot train articles. And who are going to come in part-time practice? ISL, insurance brokerage, those who are into insurance brokerage, part-time practice. All those who have taken specific permission, part-time practice. All those who have gone for employment under practicing CA firm, they are part-time practice. All those whose lectureship, tutorship exceeds 25 hours per week. Now, let's see very simple clause 12. So, it's all about signing. It's all about signing. Let's see the clause. So it says that if CA firm, if CA firm gets a professional assignment of examination, and then they're supposed to sign reports or certificate or financial statement, balance sheet, P&L, any document, financial, non-financial. It can be as per law or voluntary. It can be submitted to outside authorities or third parties or client. Signing should be done by responsible people. It should be done by CA in practice who is partner of the firm. CA in practice who is partner of the firm. So signing should be done by CA in practice who is partner. Further, section 26 says that on behalf of CA firm or CA, only chartered accountants should sign to ensure. So clause 12 also says to maintain quality. Section 26 also says to maintain quality. Section 26 is also there so that fake chartered accountants don't sign on behalf of CA firms. Now we have discussed these things, that it is applicable to final documents. Final documents, they may be submitted to the statutory auditor, they may not be submitted. And this is after professional examination assignments. Subject matter can be financial, non-financial. But then when it comes to routine documents, delegation can be done. Signing can be done by others in the firm. Okay. So after appointment, if there are correspondences, information is, so signing correspondences by others is fine. Then asking for information, asking for audit queries, and when you get information, sending acknowledgement, all this can be signed by others. Vouchers and verification document signing can be done by others. Draft reports and billing can be done by others. Attending routine matters. So if there are tax matters going on, attending those routine matters can be done by other persons. Administrative signing can be done by other person. Okay. So when it comes to routine documents, routine documents can be signed by others. So chartered accountant can delegate this. But even after delegating, he can delegate work, but ultimate responsibility to answer all mistakes will be his only. Okay. When they sign should be in the name of the firm. It should be in the name of the firm also and name of the individual also with MRN, FRN, UDIN number. Then part 2, when we talk about part 2 is applicable. Part 2 is applicable to all the chartered accountants who are in service. Okay. So clause number 1 says that chartered accountant who is doing job cannot share or agree to share any part of his professional work and fees with anyone. He should not share his remuneration with anyone. Paying to placement consultant, not allowed. Okay. Sharing with relatives, personal sharing is absolutely fine. Relatives, dependent, friends is absolutely fine. Then clause 2, a chartered accountant in service should not accept fees from ABC, A square, B, C square. That is, should not accept any share of the fees from agents, A for agents, A for advocates, B for brokers, C for CS, C for customers, which are appointed by the employer. So there should not be corruption or cut practice. You should not accept fees from them. It is not allowed. This is not allowed. So if a COP holder is doing job, then both these clauses will get applicable. Then part 3 is applicable to chartered accountants in general. That means those who are in practice as well as those who are in job. So if any chartered accountant expresses himself as a fellow chartered accountant when he is not, he is doing misrepresentation, he will be he will be guilty of professional misconduct under clause 1. So as per clause 2, chartered accountant will be held guilty of professional misconduct, whether in practice or not, if he does two things. If he is not supplying the information, and second, he is not complying with the instructions and requirement of 8 bodies. We can divide them into 4 bodies related to ICAI: institute, institute's council, then committee, then quality review board, and 4 bodies related to disciplinary mechanism, that is appellate authority, below that disciplinary committee, below that board of discipline and disciplinary directorate. So in this particular case, institute sent a lot of letters asking for information, give information of other businesses and occupation you're having. He was having a proprietary firm, not into CA practice but into business. He didn't give details of the proprietary firm. He didn't give details about that he was a director in a company. Because he is not giving the details, he is not giving details, he was held guilty under clause 2. Then again institute sent lot of letters. Institute sent lot of letters and asking, how come you are training an article without membership? And he was not replying. He was not replying, he was not responding. Again held guilty under clause 2. Then we have clause 3. So chartered accountant in practice will be guilty of professional misconduct if he knowingly gives false information. Knowingly gives false information to whom? To give false information under clause 6, where he can go to other chartered accountants in practice or apply for tenders, or clause 7, where he can give write-ups or other permissions given under these clauses. So if he is knowingly giving false information when going to other chartered accountants in practice, or going for tender, going for write-up, or more permissions given, basically you are given permission and you are misutilizing that opportunity by giving false information, then you will be guilty under clause 3. Then after completing for first schedule, part 1 having 12 clauses and part 2 having 2 clauses, part 3 having 3 clauses. Now part 4 is about other misconduct. If you do these activities in your during your professional work, professional course of action or personal course of action, then you will be held guilty and you will be called guilty of other misconduct, because it is covering professional life as well as personal life. So what is clause 1? A chartered accountant. Now this part 4 is applicable to all the chartered accountants, whether in practice or not, is applicable to all the chartered accountants. So just like part 3 is applicable to all the chartered accountants whether in practice or not, part 4 is for all the chartered accountants whether in practice or not. Now what clause 1 says? Clause 1 says that if you are held guilty, you will be deemed to be guilty of other misconduct if you are held guilty by a court, criminal or a civil court, punishable with an offense, which can be with an offense for imprisonment not exceeding 6 months. So basically, you are held guilty for an offense, for a small offense where imprisonment is not exceeding 6 months. Okay, then in that case you will be held guilty under clause 1. Now this thing may happen during professional course or under personal course of line. Now clause 2, if chartered accountant practice will be deemed to be guilty of other misconduct if it does anything which in council of opinion brings disrepute to the ICAI or bring disrepute to the profession, to the institute or profession, he will be held guilty. So now these are defined other misconducts. Section 22 says that we are defining professional misconduct and other misconducts in schedules of CA Act. But apart from this, disciplinary directorate can pick up any situation, any circumstances, do investigation and declare it as a misconduct. They have power. So section 22 says that they have power to investigate any other circumstances as per the procedure given in section 21 and declare it as other misconduct. And that's why we have other misconduct as per past decided cases also. In past, courts, councils have declared these cases as other misconduct. Shortcut is A, B, C, D, E, F, G. A for anger. If you use language or comments which are abusive, derogatory, objectionable, other misconduct. In anger, if you are publishing advertisement to malign image of the other person, other misconduct. If you are using article for non-professional work, other business or occupation like agriculture, other misconduct. B for bank. While doing bank audit, if you are submitting bogus bills, other misconduct. Then C for client. If you are going to client and using coercion to get loans, other misconduct. Coercion, you are using coercion for payment of fees, other misconduct. Other misconduct. If you are using, again, if you are going to client, if you are going to client and retaining, if you are going to client, again, retaining books of accounts for fees, you are excising lien on books of accounts, other misconduct, clarified by ethical sand board also. Deceiving, you are going to client and manipulating minutes, other misconduct. Giving fake documents as received from the authorities, from ROC, from income tax, other misconduct. Coming to your office and issuing fake experience certificate to others, other misconduct. Forging will of the relative, other misconduct. Then E for employer, you are going to employer submitting fake experience certificate, other misconduct. Other misconduct. If you are working negligently as an employee, other misconduct. You are doing, then F for fraud. You are doing fraud with ICAI's funds as a central council member or regional council member, other misconduct. You are running a NBFC where checks are getting bounced because of lack of funds. You are doing fraud with others, other misconduct. Other misconduct. And if the checks are getting bounced, also apply Negotiable Instrument Act. You are doing non-compliance of Negotiable Instrument Act also because your checks are bouncing. Your government is asking for reply, you are not doing it, other misconduct. Government is coming to you and you are getting possession of the government records, unauthorized government record possession, other misconduct. You are looting government. You are writing book on black money, other misconduct. Filing two returns, other misconduct. You are fabricating challans and documents, making and creating fake documents and encashing money from the government by opening fake account of the client, other misconduct. Now, shortcut of second schedule. So we have shortcut of second schedule. Second schedule part 1, there are 10 clauses. So first 5 cricketers, first 5 cricketers and next 5 are the sports. So Chris Gale is for confidentiality. Rohit Sharma is for report signing. Flintoff is for forecast future estimates, forecasts and future estimates. Sachin is for substantial interest. MSD is for material omission, material information, material fact omitted, material omissions. Then motor car racing, just focus on the images. Motor car racing, black color cars, motor car racing, then white colored ball, that is golf. Then someone is trying to kick a football, that is soccer. Then you can see arrow and bow, that is archery. Then you can see brown colored ball, that is basketball. Now cars, motor car racing, that is for material misstatements. Then golf, that is for gross negligence. Soccer, sufficient and appropriate information. Archery, it is for audit procedures not being followed. Then basketball, bank accounting not done properly, banking not done properly. Then you can see the shortcut. Then focus on the images, comedy nights with couple, Candy Crush, blue color Facebook, and then mobile phones. Okay. Comedy nights with couple, if you contravene any act, regulations, rules, then Candy Crush, Candy Crush is about confidentiality. Candy Crush is about confidential, breach of confidentiality by employee. Chris Gale word, breach of confidentiality by CA in practice. Facebook, that is giving false information to CA Institute, same 8 bodies, giving false information to 8 bodies. It will be misconduct. Then mobile phone, that is money defalcation, stealing money, stealing money is again professional misconduct. Then part 3, there is only one clause, that is over, other misconduct. Now, when we talk about second schedule, all the case of second schedule or both the schedules will be referred to disciplinary committee. Part 1 is for chartered accountant. Part 1 is for chartered accountants in practice. CA will be deemed to be guilty of professional misconduct if he discloses any confidential information. There are only 2 exceptions to it. Exception number 1, if consent is given by the client for disclosure of the information, that is absolutely fine. And second, if it is allowed by law, if it is required by law. Rationale is pretty simple. Always preserve you have access to a lot of crucial sensitive information. Always preserve confidentiality, otherwise people will stop trusting you. You will lose your dignity, and there will be severe consequences in the form of damages and legal cases. So protect yourself, that is the ultimate objective. Now let's discuss the first things which are related to client's consent. Now, disclosure of information as a part of performance of professional duty. So if a client approaches you and says that I want a service from you, I want a report from you, certificate from you, form from you, documents from you. Okay, client is approaching us, and client is giving us assignment. Client is giving the assignment. That means client is consenting to such reports and certificates and everything. And if disclosure is done during this profession as per the requirement of the assignment, that will never be considered as breach of confidentiality. If you are making reports, certificates as required by the requirement of the reports, as required by the law or standards, that will never be considered breach of confidentiality. In other cases, consent will be required. If it's proprietor firm, take consent from proprietor. If it's partnership firm, take consent from any partner, not just designate partner, any partner. If it's a company, consent will be required from board of directors. If they have delegated it to managing director, then consent can be taken from managing director also. Then when it comes to working papers, working paper is property of the auditor. He is the owner. He has the discretion with whom to share or not to share documents. He is not under any obligation to share these documents with client or other auditors. So branch auditor is owner of his own documents. It's up to him whether to share or not. Principal auditor can always read the report, go for discussion and visiting it. Whether to share documents or not, it is discretion of branch auditor. Then auditors generally share information as they deem fit, but it is not expected, not required to share documents. Sharing of information is very common. Sharing of document is not required. So here they are talking about the sharing of the information. So about the consent, the first exception, consent and related things. Next is legal things. They are legal. sometimes information sharing is required by law, and we know the best example is fraud reporting under section 143 subsection 12, or as per RBI regulation also fraud reporting is required. Then one more law, there is section 126 of Evidence Act, in which says that if client gives any information to lawyers or such other professionals during the course of case, then then this information lawyers and chartered accountants are not under any obligation to share this information with anyone. So sometimes law protects to preserve confidentiality. Sometimes it says to give information. So both kind of laws are there. Now next is, after that, after confidentiality, next clause is Rohit Sharma, that is report signing. To preserve quality, whenever chartered accountants in practice gets the assignment of examining information, documents, and then signing reports, certificates, documents, financial statements, can be statutory, may be statutory, may not be statutory, then these report signing should be done. Report signing should be done only when work is done or thoroughly reviewed by chartered accountant in practice, or partner of such person, or employee of such chartered accountant or firm in practice, or any other chartered accountant in practice. That means work was given as assignment. To preserve quality, responsible people should have examined it, or under whose supervision they should have done. Then only signing is done. That is possible. So rationale is very simple. We want to preserve the quality. We want only thoroughly verified things to be signed. That's why this requirement is there. Okay. To ensure that work is done by responsible people only. And exception, that means a very good thing is that you can delegate work to other chartered accountants in practice. Then we have clause 3. Then we have clause 3, and that talks about forecast. Chartered accountant will be deemed to be guilty of professional misconduct if he signs or he allows to use his name for any prospective financial information. See, clause 3 says that we can sign prospective financial information, futuristic financial information. His name can be used, but then there are conditions. It should be as per the requirement of guidance notes or SA 3400. And in this, we only talk about reasonableness of assumptions and appropriateness of underlying data. We don't talk about the outcome. Don't give guarantee of the outcome. Don't give surety of the outcome. Don't vouch accuracy of the outcome, because outcome is based on a lot of things which are not in our control. So don't do that. Then prospective information can be of two types. Forecast means which are based on best estimate assumptions or realistic assumptions. They are called forecast, and based on hypothetical assumptions. So forecast, prospective financial statement which are based on hypothetical assumptions, they are called projections. So it's very simple. Do that as per guidance notes and standards. Don't do some positive things, don't do negative things, and you are saved. So there's a guidance note of 1982 which says that chartered accountant can prepare forecast, he can review the forecast, he can report on the forecast. Just focus on the assumptions, talk about the appropriateness of assumption. Don't vouch accuracy of the final output. And same rules are applicable for forecasts also and projections also. Don't talk about the output, don't talk about accuracy, guarantee, surety. Okay. Now requirement of guidance rule and SE 3400 is almost same. Only one change is there as per SE 3400, which replaces the guidance note now. Chartered accountant cannot prepare and check himself. So as on today now, preparation should be done by management and examination should be done by chartered accountant. Okay. So guidance note and SE 3400 also support the same thing. There's a guidance note with respect to reports which are given in prospectus. So if you're checking reports in prospectus, reports which are given as per Companies Act and SEBI regulation, check it as per these guidance note. So chartered accountant signed 97 projected statements. He signs, vouches accuracy, gives guarantee about 97 of them without checking anything. So first of all, he's signing them. So signing them, giving guarantee, then it's a guilty. He'll be guilty under clause 3. He'll be guilty under clause 3. He is doing it without checking. He's a negligent, guilty under clause 7. Not collecting sufficient appropriate evidence, guilty under clause 8 also. So clause number 4 says that if you're performing any examination assignment and you're signing reports, certificates, financial statements, documents, it may be as per law, it may be voluntary. You should not do these assignments if chartered accountant or his firm or partners together are having substantial interest. If these guys are having substantial interest in the client, because there will be significant self-interest threat. So if there is substantial interest, don't express opinion, don't do such assignments. Okay, very simple. This is there to protect the independence of the auditor and then to ensure that society, public is having very high regards for the auditor. They show trust on the auditor. Substantial interest, we already know it is 20% or more. Now inclusions and exclusions. Now this we have already seen clause number 12, first schedule part 1 clause number 12, which I have just explained, that it covers any examination assignment. Clause may be having restricted wordings, but then as per the clarifications, it covers all the time of examination assignments. It covers all the type of attest functions, whether it's reports, it's certificates, financial statements, any document, financial, non-financial, as per law, may not be as per law. Everything is covered. Definitely, if a chartered accountant is in employment and is preparing financial statements for the employer, maybe for the MD or CFO, which is for internal purpose, this clause will not get applicable. As such, this clause is applicable for chartered accountants in practice. So if this guy is working as an employee and when he's performing his duties, he's making financial statements, this clause doesn't get applicable. There are clarifications of clause 4, and the shortcut is substantial interest in Wild Rice Limited. S is for section 288. So in income tax, there is a section 288 which gives disqualification of tax auditor to protect the independence. So it is on the same lines as clause 4, to protect the independence. Then I is for internal auditor. If internal auditor cannot do GST audit. Now GST audit is not applicable, we know that, but that clarification is still there in the module. Then Wild Rice, W stand for writing books. So chartered accountant is writing books, cannot do audit. Then I again stand for internal audit cannot do company audit. We have already, this is already covered in Companies Act. Then liquidator cannot do audit. Liquidator is supposed to prepare liquidator's statement of final account as per section 348. He himself cannot do audit of that statement. D is for directors. Directors cannot become auditors. And then further, even after leaving directorship, maybe after the end of the tenure or resigning, there's a cooling period of 2 years. They cannot become auditor in 2 years from the date directorship comes to an end. Then R is for relatives. Chartered accountant cannot do audit of relatives, cannot sign audit reports, certificates of relatives. Okay. And definition of relative will be as per AS 18. Father, mother, brother, sister, son, daughter, spouse. So if you have to remember, it's one layer and spouse. Then again, internal auditor cannot do tax audit. Internal auditor cannot do tax audit. Then next is they have recommended it for consultancy. They have recommended it for consultancy, clause 4, but then it is not mandatory. It is absolutely fine if you do consultancy services where substantial interest or other independence issues are involved. Then comes to employees of the organization should not do audit of that organization or should not do audit of other organizations which are under same management. Lecturer, part-time or full-time, cannot do audit of the college. Trustee cannot do audit of trust. So whenever a chartered accountant is appointed, lot of things are applicable in that assignment. There can be a separate law which is applicable, statute applicable to that assignment. There can be rules or regulations by authorities applicable to that assignment. There can be trust deeds or other contracts which are applicable to that assignment. That assignment may need approval by board or trustees. Okay. For that assignment, all these things may be required. So ensure that all are complied with. Finally, engagement letter is also signed. Ensure that all these documents are complied with. When you are accepting any appointment, so that you maintain proper independence and ethics. These documents are arranged in a sequence. First come law, then comes regulations, then come deeds, instrument contracts, then comes approvals, then come engagement letter. There are more clarification with respect to clause 4, which we cover along with the recent decisions of Ethical Standard Board, because we are following everything as per the module. Then let's go to clause 5. So clause 5 is very simple. A chartered accountant will be deemed to be guilty of professional misconduct if he fails to report material omissions. If material omissions are not reported. So same, the assignment, any examination assignment, and after that signing of a lot of documents, financial, non-financial, he knows that there is a omission, but he is not reporting. So there are material omissions, he knows that, and he is not reporting. So it's a misconduct under clause 5. So if disclosures or reporting is not done with respect to material omissions, it should be material. So for this unit, auditors are going to need materiality level. They are supposed to compute materiality level as per SA 320. Item may be material for balance sheet and it may be material for P&L. So check both. If it's material for any of them, whether it's balance sheet or P&L, then reporting should be done. If not, he will be guilty. Inclusion, exclusion are on the same lines. We already studied clause 12. It is applicable to all type of examination assignments. Case studies. So one thing is related to the assets. So if there's a mortgage on any asset, if there's a mortgage on any asset and if that is not reported, guilty of professional misconduct. So basically there was a charge on the asset, but that was not disclosed in financial statements. Auditor did not report it, guilty. Sinking fund was omitted. Auditor did not report it, guilty. Loan was taken from Provident Fund, but taken from Audit Fund. It was omitted in financial statements. Auditor did not report it, guilty. Clause 6. If there are material misstatements, again material misstatements in the financial statements, documents, and auditor is aware about it, he is not reporting it, material misstatement not reported. To be more specific, known material misstatements not reported, he will be guilty. So if known material misstatements are not reported, it's a misconduct. Materiality is as per 320, rest of the explanation as per clause 5. Liability is understated, underprovided, it is a material misstatement, known material misstatement not reported, misconduct. Lot of documents, information is given to tax authorities. There are known material misstatements in information documents given to tax authorities, not reported, guilty. Then lot of certificates information is given to bank. There are known material misstatements in documents, information, certificates given to bank. Not reported, guilty. If question is silent, whether chartered accountant is aware or not about these things, we should give conditional answer. If he was aware and is not reported, he is guilty. If he is not aware, then he will not be guilty. You should give answer from both point of view and be on safer side. Then clause 7. Clause 7. If there is a gross negligent, if chartered accountant in practice is doing gross negligence, if chartered accountant in practice is doing gross negligence, then he will be guilty under clause 7. So chartered accountants are supposed to remain careful, gain the knowledge, use proper skills, knowledge, experience, perform assignments properly. Small minor negligence are absolutely fine. Delays of few days and is absolutely fine. Major negligences, gross negligences are not fine. Let's see the example. Chartered accountant is appointed, but he is not appointed to represent the client. He is not going in the hearings. He is not repeatedly. He is not representing the client in front of tax authorities. Gross negligence. He goes to audit. Obvious misstatements not noticed. Gross negligence. There are suspicions, but he is not going in depth. Gross negligence. He is taking unnecessarily lot of time, big delays, lot of time. Gross negligence. He is signing balance sheet P&L before company signs it. Gross negligence. If he is signing two sets of balance sheet P&L, one for income tax, one for bank, gross negligence. He is saying in audit report that we are giving details in separate notes. There is no separate notes. Gross negligence. He is using cash on delivery for sending such a sensitive, important document, audit report. Gross negligence. Clause 8. Clause 8. If chartered accountant in practice is not collecting sufficient information before giving audit reports, certificates, signing documents, he is guilty. Next, if there are a lot of instances, exceptions of lack of evidence, he is supposed to give disclaimer, but still he gives opinion, misconduct. Not collecting sufficient appropriate information, misconduct. Not giving disclaimer where required, misconduct under clause 8. So responsibility to express opinion, for a lot of information should be collected, not collecting information, misconduct. And again there is a, if not giving disclaimer where required, misconduct. So they give example that there is a company and the only asset in the balance sheet was investment, and no proper information was collected about that investment. This shows no sufficient information, and if auditor is giving opinion without this, not collecting sufficient information, it will be a misconduct. Then there are cases. So newspaper circulation certificate was given. So circulation certificate was issued by chartered accountant in practice without seeing how many newspapers were printed, how many were dispatched, how much collection was done, nothing. So without collecting sufficient appropriate information, guilty under clause 8. Also apply clause 7 because it is a gross negligence also. Then lot of certificates were issued to IDBI bank. On the basis of these certificates, loans were given. Again, no sufficient information was collected before issuing these certificates. And then you were supposed to mention limitations, things which were not performed, and assumptions on the certificates. Nothing was mentioned. So it was considered misconduct under clause 8, no sufficient information, and further this assignment is performed grossly, negligently, with not gross negligence, misconduct again. Then we talk about a construction firm. Financial statements of construction firm are not having a very significant transaction. A sale of land was done, it is not having that transaction. And a transaction is there, a loan is shown which should not have been there. So basically financial statements are misstated. Financial statements are misstated and auditor gives clean report. He is not reporting anything. So they are applying clause number 6. They are applying clause number 6. Misstatement not reported, work done negligently, clause number 7. No sufficient information, clause number 8. Okay, so they are applying everything. So these are rare cases where multiple clauses are involved and they're involved in this particular part of professional ethics. Now, okay, there's one more case. There's one more case. We missed it during the lecture. So, basically a fraud is happening. A fraud is happening. Fraud is happening. A respondent failed to report on bank account opened by the client in their capacity as a proprietor. Should have hard copies of bank account. So basically the thing is that he is doing an audit and some bank accounts are opened. They're not opened properly. There are a lot of transactions, in it. He is not collecting any information to check that. So they have applied clause 7 and 8. So bank account opening and its transactions are not properly checked. Without that, OPIN is given. So they are applying clause 8, no sufficient information collected, and they are also applying clause 7, gross negligence. Clause 9. Chartered accountant practice is supposed to follow generally accepted auditing procedures. You get them as per law, as per icai pronouncements, like standards, like guidance notes, like technical guides, practice manuals. You get it from there. You get from these things. If because of some genuine reason, you are not supposed to, if you're not able to follow something, you're supposed to put it in the report. You're supposed to put it in the report, okay, as a departure. If you're not following these things, it's a misconduct. If you're not explaining non-performance as a departure in the audit report, it's a misconduct. You're supposed to do two things. Follow generally accepted auditing standards, auditing procedures, and report all the departures. Now, there are certain requirements with respect to audit. In listed company, only the firm with peer review certificate, is supposed to do audit. If not, it is a misconduct. If they do it without peer review certificate, it is a misconduct. While signing, you need to put name of the firm, name of the partner, FRN and MRN. If not doing it, it's a misconduct. Then you're supposed to put UDIN. You're not putting UDIN, it's a misconduct. Reporting material departures, or that is non-compliance of audit procedures, should not be used as an excuse for not performing audit procedures. Chartered accountant has to specify reasons why he was not able to do it. If there are genuine reasons, it is acceptable departure. If not, then it will be considered as misconduct. So, when it comes to circulation of newspaper, Audit Bureau of Circulation is a company where all the reporting should be done. They have issued specific rules how to check circulation. Auditors are supposed to follow those things. If they don't follow them, they are not following generally accepted auditing procedures. On same lines, when they do stock audit, they have to follow instructions given by the bank. If they don't do it, they are not following generally accepted audit procedures. Clause 10. CA in practice, CA firms, they are supposed to maintain two types of bank accounts. Two types of bank accounts. One common bank account for operations, for collecting all the fees, short-term expenses from the client and making all the payments and drawings. Then separate account for money other than fees and short-term expenses, investment money, buying property, money received on account of sale of property, long-term expenses and so on. So basically, one more chart, if you get money for fees and remuneration, put it in common account. If you get money for short-term expenses, put it in common account. If you get money for long-term expenses, put it in separate account. If you get money for investment, buying property, proceeds of sale of property, put in separate account. Whenever you put any money on separate account, it should be used within reasonable interval of time. We should use it within reasonable time for the purpose for which it is given to you. So clause 10 is simple. You have to put certain money in separate account. That is money other than fees and short-term expenses. If you don't do that, you are guilty. And if you don't use it within reasonable time, you will be again guilty. Then part 2 is for chartered accountant chartered accountant in general. They may be in practice, they may not be in practice. So if any chartered account contravenes CA Act, any section or rules made under that or regulations made thereunder or guidelines, any of them, they will be guilty under clause 1 of part 2 of second schedule. So chartered account is supposed to follow legal framework. If they don't do it, they will be punished for misconduct. So regulation related to articles are very famous related to articles. So if any chartered accountant is charging premium for giving articleship, it's a misconduct. Charges security deposit, it's a misconduct. Security deposit, it's a misconduct. If chartered account if he demands loan, so charges premium directly, indirectly, or ask for security deposit directly, indirectly, loan directly, indirectly from the article for articleship, it's a misconduct. Apart from that, if any regulation related to registration is non-complied, it's a misconduct. Like number of articles which can be, maximum number of articles which can be trained by a chartered accountant in practice. So we are seeing clause number 1 and then the regulation related to articles. After registration, there are regulations which are related to working hours. So flexible hours are removed. There should be fixed timings, and the timings, the starting time, they have given a range. It should start between 9 o'clock to 11 o'clock. Starting time should be between 9 to 11. And when it comes to ending time, it should be between 5 to 7. Okay. So they have given the range when the timing should start and when it should end. If we talk about the number of hours per week, number of hours should be around 35 hours. Excluding lunch break, articles are supposed to work for 35 hours. And in emergency or workload situation, for some time, some weeks, they can go for working hours of 48 hours. 48, so not 48, 45, not exceeding 45 hours. If they exceed 35 hours, then whatever time they exceed, a compensatory leave should be given proportionately for number of hours they have done, and so proportionately number of days they will be getting compensatory leave. Then when it comes to after timing other work, college timings should not clash with the articleship timing, and you can go for any other course along with articleship. You will need a prior approval. If you want to go for any other course along with articleship, a prior approval is required. Any other business or occupation, again prior approval is required. So timing should not clash, and prior approval is required for any other course or business or occupation. So after working stipend, yes, stipend payment is mandatory. Monthly stipend payment should be done. Either it can be done through a crossed account pay check, or it can be through deposit to a bank account. Through a bank account, it should be paid on monthly basis, no 6 monthly or 1 yearly basis. Now regulations which are related to chartered accountants. First one is CPRs. On regular basis, CA Institute keeps announcing what are the minimum CPR requirement for those in practice and those not in practice. All are supposed to fulfill that requirement. If they don't do it, it will be guilty of professional misconduct under this clause 1 and chartered accountant will be punished. Apart from that, it is advised that chartered accountants should not take classes between 9:30 a.m. to 5:30 p.m. Then as we go ahead, clause number 2. So if we have a shortcut, first was combined with Kapil and then Candy Crush, that is confidentiality. So under clause 2, a chartered accountant who is doing a job, who is under employment, is supposed to preserve confidentiality. He can disclose confidential information only when it is allowed by the employer or it is required by law, either required by law or allowed by employer. Rationale is pretty simple: to protect the clients, to retain their confidence, to protect our own dignity, and we have fiduciary duty. If we are given some work, duty to do all connected aspects. If a COP holder is doing part-time or full-time job, this clause will get applicable. Next, if we talk about clause number 3, so that was Facebook, false information. So if chartered accountant, whether in practice or not, gives false information to 8 bodies, 4 are related to a C institute, its council, its committees, or 4th one, quality review board, and 4 related to disciplinary mechanism, appellate authority, disciplinary committee, board of discipline, director of discipline. If you give false information, then guilty of professional misconduct. So some cases are there. So misrepresentation, misrepresented that he is a fellow chartered accountant. No, he misrepresented that he is a partner in a firm to become a fellow chartered accountant. So he was held guilty. Then in front of a hearing, the person said gave false information in front of disciplinary committee. Again guilty. Institute asked repeatedly, please confirm how many paid assistants you have, what date paid assistants left you. Is not confirming. That means he is giving false information. Again, he is guilty here. Then we have clause 4. So mobile money embezzlement or defalcation. So if chartered accountant, whether in practice or not, he steals money, it will be a professional misconduct. Very simple. Whatever is the analysis and the rational part, you can simply skip through that. No need to just have an overview, no need to remember it, learn it. Then part 3 over, that is other misconduct. A chartered accountant, whether in practice or not, if he is guilty by court for any offense which is punishable by imprisonment exceeding 6 months, then he is guilty of other misconduct under second schedule part 3. Then we start with council guidelines. So we have council guidelines, council general guidelines 2008. Shortcut is taken from CCM bulletin. So shortcut is very simple, taken from CCM bulletin. Let's understand, guys. T is for tax audit limit, fees is for payment of undisputed fees, C is for company audit limit, C is for corporate form of practice, M is for maximum limit of non-audit fees, then B is for books of accounts maintenance, then U is for UDIN number mandatory, use of common logo, E is for employee, how employee should work, T is for tender, I is for indebtedness, and N is for network. Let's see one by one. These guidelines are applicable to all the chartered accountants, whether in practice or not. When it comes to employee, if he is working negligently, if a chartered accountant is working as an employee working negligently, should work diligently. It will be breach of council guidelines. It will breach of guidelines. Then 2 things are omitted. Books of accounts. All the chartered accountants in practice are supposed to maintain a complete record of client details. How many clients, how many clients they have, what kind of assignment they are doing. Apart from that, they are also supposed to maintain books of accounts. They are supposed to maintain financial records, how they are earning money, and they are supposed to maintain again books of accounts, cash book and ledger. It is mandatory, irrespective of what is the fees, irrespective of whether tax audit is applicable, irrespective of whether you are an associate or a fellow chartered accountant. It is mandatory. Proper books of account should be maintained. Just keeping record in Excel or keeping record in mobile phone is not sufficient. Then tax audit assignment. A chartered accountant in practice can do maximum specified number of tax audits in a particular financial year. We are talking about tax audit under section 44AB. Maximum limit is 60. Maximum limit is 60. When it comes to firm's limit, it is 60 into number of partners. When it comes to exclusions, yes, audits which are done in reference to 44 AD small businessmen, 44 ADA small professionals, and 44 AE small transporters. Okay, these guys, if we are doing these audits, then it will not be counted. Limit of one partner can be used by other. So if there are 10 partners, limit will be 10 into 60, 600. One partner can sign all 600 signs. If you're doing audit of multiple years, it will be each year will be counted as one. Each year will be counted as one. If you are doing joint audit, for each joint auditor, it will be counted as one. If you're doing audit of HR branch, it will be counted as one. If you are doing audit of multiple branches, it will be counted as one. If you are doing part-time practice, you will not get any limit. Record keeping is mandatory to ensure that detailed record should be kept for number of assignment to ensure the limits are complied with. Then assignments of the firm should be distributed in such a manner that overall quality control system is followed as per SQC1 and quality is maintained. Then we talk about fees. Very simple. Incoming chartered accountant should not accept any assignment unless fees of the previous auditor is undisputed fees of the previous auditor is paid. What do you mean by undisputed fees? Undisputed fees means outstanding provision for audit fees, liability of audit fees appearing in balance sheet which is signed by auditor and auditee both, that will be considered as undisputed audit fees. Further we talk about sick units. Okay, it's very there's an exception for the sick unit. If the client is sick, then this particular guidelines will not be applicable. When a client will be considered as sick, two conditions need to be fulfilled. Number one, the net accumulated losses has equal to the net worth or exceeded the net worth. Okay, so basically net worth has become zero. And second, client should be registered for at least 5 years. So registration should be for 5 years or more. These two conditions satisfied, then that entity will be considered sick unit. Then company audit assignments. Again, specified number of audit. A chartered accountant cannot exceed specified number of audit. And as per this limit, it is 30. When it comes to firm limit, it is 30 into number of partners. Exclusions, there are two exclusions. One person company and dormant company, only two exclusions. When it comes to counting in joint audit, it will be counted as one for each joint auditor. HON branches of same company will be counted as one. Multiple branch of same company will be counted as one. You have to see partner count at the time of accepting assignments. At the time of accepting, so it is not start of the year or end of the year. It is at the time of accepting the assignment. You have to see the partner count. If partners are in full-time employment or part-time employment, then they will not be counted. Limit will not be given for them. Record should be maintained. Detailed record should be maintained to ensure the limit is complied with. If we discuss section 141, the limit is 20 and there are 4 exemptions. Smallest OPC, then above that small company, above that dormant company, above that private company where paid up capital is less than 100 crores. till date only case has been asked as per section 141. If they give hint of guidelines, then you have to use limit of 30. And if they ask, then apply independently. Apply Companies Act section 141 independently, get answer as per that. Then apply council guidelines 2008 independently, get answer as per that. And then give the final answer whether things are possible or not. Then if we talk about maximum non-audit fees, that's very interesting, pretty interesting. This diagram explains everything. Now, so there is a restriction that non-audit fees should not exceed statutory audit fees. Okay. So first of all, this is applicable to 4 types of companies. It is applicable to listed company, then below that public sector undertakings, below that government company, and below that public company where paid up capital, where turnover is 50 crores or more. It's only applicable to 4 types of entities. So what it says that now the amount of fees, so this is our company, a very simple, this is our company. The amount of fees from other works assignment and services, OWAS, other works assignment and services, amount of fees which audit firm and its associates together, they earn, these fees should not exceed the statutory audit fees of the auditor. So here in the example, if suppose statutory audit fees is 10 crore, then OWAS fees of audit firm and associate taken together cannot exceed 10 crore. What do you mean by associate concern? Associate concern can be a company or a partnership firm where proprietor or partner of auditor is a director or partner plus having substantial interest of 20% or more, then it becomes associate concern. So now we know applicability is applicable to 4 types of entities. If regulator gives a stricter thing, then follow that. Then inclusion, it will include OWAS will include management, consultancy and other services as we have discussed earlier. It will exclude few things. It will exclude audit conducted under other laws, like it will exclude tax audit. It will exclude certification work required to be done by statutory auditors, certification work and representation work. It is going to exclude 3 types of work. Then if we talk about indebtedness, it is pretty simple again. So if now they have given limit that auditor can be in the form of proprietor or partner, along with the firm, along with their relatives. So these guys together can have indebtedness plus guarantee or security on behalf of third party, for third party to the entity. Indebtedness and guarantee and security taken together, they have prescribed the limit. If they say that if the limit is given by the law, simply follow that. For example, in company audit limit is 5 lakhs, in tax audit limit is 0 for indebtedness. And for guarantee and security, there is a separate limit. For guarantee and security, there is a 1 lakh limit in company audit. Okay. So follow that limit. If that limit is not there, for example, concurrent audit, revenue audit, you follow the limit of 1 lakh. So everything together should not exceed 1 lakh. Unjustified removal, if any time council or its committee feel that a particular removal is unjustified, they can give instruction to the incoming auditor, don't accept the assignment. Incoming auditor is supposed to follow those things, otherwise it will be contravention of the guidelines. Regarding tender, we have already seen in clause 6, it's exactly same, nothing new. Then we talk about UDIN. All the reports and certificates should need a UDIN number, nothing new, nothing special. UID number is required. It should be generated within 60 days. Now let's talk about network. When a lot of entities or individuals, they come together to work, they get associated, it is called larger structure. It's called larger structure. Then if they come together so that they can cooperate with each other, they can work with each other, together they can work with each other, that's called network. Okay, so both are conceptual, not exact definition, conceptual definition. People coming together is a larger structure, and they're coming together and they cooperate with each other is a network. A very simple referring work to each other cannot be considered as cooperation and network. A very simple developing software together cannot be considered as a network. Network means working together. So, if this information is given to reasonably informed third party, and if that they feel that looking at this information arrangement, I think they are working together, it is called RIT-PT test. So perform RIT-PT test to understand whether it's a network or not. You don't need a separate legal entity, separate company part, not necessarily a separate company, partnership firm or any trust is required to make a network, not necessarily. You can. And then they give a specific definition. We are wonderful, this flowchart is important. They give specific definition of deemed network. They have purposefully kept it this way so that they are able to cover any arrangement into network. What is deemed network? Deemed network is a larger structure of entities and individuals getting associated with each other for common purpose to cooperate with each other, to help each other, plus either there is a common ownership, control, management. Let's come together, let's own everything together. Or a common brand name, or a common strategy to achieve business objectives, or common quality control system, or sharing profits or sharing costs, major costs, immaterial cost sharing like developing software, doing trainings will not be considered as a network. Or sharing significant resources, only sharing some manuals or training information or software cannot be considered significant resources. When you start sharing people also along with information, and you start sharing people, partners, you start sharing partners, managers, employees, then premises, then it will be considered as sharing significant resources, and then only it will be deemed as a network. So network can be in different forms. It can be a simple agreement, that is one of the form, or you can make an association. You can simply make an association to run the network. You can, or bigger than that, you can make a partnership firm to run the association, not more than 20 partners, or bigger than that, you can make a LLP to run the network, or bigger than that, you can have a company to run the network. So it can be a simple agreement, or a mutual entity like association or partnership firm or LLP, or a company. Who can join? Individual chartered accountants, sole practitioners, proprietors, partnership firms, or management consultancy companies. So any format in which chartered accountants can practice, all those entities can join the network. Ensure that entities are joining only one network, and all the firms where there are common partners, they should also join only one network. Then every network is going to have name, and they can have a distinct different name of the network. This name needs to get approved by icai. It will get approved by icai, and it should have words like and affiliates at its end. So like mark network, mark and affiliates, spark and affiliates, star and affiliates. So and affiliates should be used, and company and associates should not be used because it is used by CA firms. Then name approval should happen as per regulation 190. And once the name institute is supposed to approve or reject the name within 30 days. Within 30 days, they will tell you So basically you need to apply 3 names and they will tell you whether any of the 3 name is allowed, approved or not. Once name is approved, then name will be reserved for 3 months. For that particular name will be reserved for 3 months. Now you need to get your network registered within 3 months of approval of the name. For registration, you are going to need Form B. For registration, you are going to need Form B. Okay. Even the multinational accounting firms which are operating in India, they can become part of the network. So if the network is registered in India, they can become part of the network. And once they become part of the network, then all other firms which are associated with them, working with them, cooperating with them, will automatically become part of that particular network. Can outside firms become part of the network? Of course, they can become part of the network. Declaration need to be given in Form D within 30 days. So outside firms can join. Declaration need to be given in Form D that outside firm has joined. Again, the condition is that they should join only one network, and wherever there are common partners, firms having common partners, they should also join one network only. Can constitution change? Of course, it can change. Number of firms can increase, decrease. Form C should be submitted whenever constitution changes. Then, are they supposed to follow ethical requirements? Of course, and that's a very important thing. PARSE, PARSE, PARSE can become a shortcut. P is for prohibited services. If any of the firm is a statutory auditor and they cannot provide prohibited services, then other firms in the network, then their associate firms or other firms in the network should not directly, indirectly give prohibited services. Don't use network firms to give prohibited services. It is as simple as that. Then A stand for advertisement. Guidelines which are applicable to CA firm, same guidelines will be applicable to network also. They cannot, clause number 6, clause number 7 and all the clarifications will be applicable to them. So they cannot do advertisements and solicit clients for the network firms. Same thing will be applicable. R stand for rotation. If rotation gets applicable, if rotation gets applicable to any firm, get applicable to any firm in the network, then other firms cannot take that assignments. So rotation will get applicable to others also automatically. Then C is for sealing. Sealing on non-audit fees. That is extremely important. Now we have already studied a guideline with respect to this. We have studied a guideline that non-audit fees should not exceed statutory audit fees. So it is an extension of that particular guideline. So what it says that, and we have made a very good chart for that, so that there was a Reliance Industries involved. If Reliance Industry is audit is done by an auditor, and suppose they are earning 10 crores. So auditor is earning statutory audit fees of 10 crores. Now non-audit fees which auditor gets or associate concern gets, we already seen what is associate concern earlier, or common partner firm. So 3 of them together. So whatever auditor is earning, whatever associate firm is earning, whatever common partner firm is earning, together should not exceed 10 crores. What about the other firms in the network? If other firms are also getting non-audit fees, it should not exceed 3 times the audit fees. It should not exceed, if other firms, then it should not exceed 3 times the audit fees. So that means 30 crores. So there is restriction on the audit firm, its associates and common partner firms taken together, and there is a restriction on other firms as well. Then E stand for ethical compliances. Network is supposed to follow with all the ethical requirements which are generally applicable to CA firm. Then consent of the client. Once you register the network, it is considered as a public announcement, and no need to go and inform each client and take their approval or consent. That is not required. Can network have bylaws? Of course they can have bylaws. And we have a shortcut, manage DTL network with stream card. Manage DTL network with stream card. So M stand for management. You can have bylaws with respect to management. What will the management committee, how many people will be there, what will be the roles and responsibilities. You can have bylaws for that. Then D stand for Detailed network, D stand for dispute. There can be bylaws for how disputes will be resolved. Then T for training, how staff of the network firms will be trained. Then how technical library will be maintained and shared with everyone. Then network N for newsletters, how newsletters will be sent to the network firms. How then S, okay, then S software, stream card, S is software, how a common software will be developed, how many technical directors will be there, what will be their roles and responsibilities, who will become technical director, what will be the remuneration. Then review, if reviews happen, peer review, quality review, different types of reviews, how they will be handled. Then how engagement partner will be selected for new assignments. Then administration, whether there will be a staff for administration of the network, how many staff, salaries, terms and conditions should be there. Then whether there will be a membership fees, how much membership fees, how frequently it should be paid. Then stream, okay, compensation, stream cards, these for compensation. When people share resources or give resources, how they will be compensated. Compensation for resources. And then R is for resource sharing methodology, how people will ask for resources, how people will give resources, terms and condition. And then database maintenance, a lot of information comes, how we can have a common database so that information can be shared with each other. Then next guideline is logo guidelines. You can have a very standard, common, everyone is supposed to use CA logo. CA logo, the design blue color rectangle, rounded rectangle should be there. Then white color background should be there. Then blue color CA should be there. Green color tick should be there. No changes should be made to it. No color changes. No changes. Don't tilt or change the dimensions much. So that is allowed. Okay. So, and then you talk about the colors. Blue color is for professionalism, growth, creativity. Green color is for prosperity, knowledge. This, that you can say. Don't try to rectify that. No need to learn that. Then we see corporate form of practice. Now we see corporate form of practice. So definitely chartered accountants can make MCC, go to the CA Institute and get name approved for management consultancy company. Once name is approved, make that company and get it registered. The purpose of this company should clearly state that it is for only management consultancy and other services. When it comes to equity holding, anyone can hold shares, chartered accountants, their relatives, no problem at all. They can become managing directors and whole-time directors. They can become managing director, whole-time directors without taking any specific permission from ICI, and they will not be in part-time practice. They will be considered in full-time practice. Yes, they will be considered in full-time practice. This was targeted in exams. But then ensure that they only provide management consultants and other services. They cannot provide audit services. They cannot provide tax consultancy services. They cannot provide tax representation services. They cannot provide accountancy services. In general, that these services cannot be given by the company. Then ethical compliance, the same lines, ethical compliance are applicable to them also. Same ethical compliance are applicable to them. Prohibited services cannot be given by them. Non-audit fees should not exceed audit fees. They are supposed to follow clause 6 and 7. They are supposed to give undertaking declaration. They will follow all the ethical requirements. Then council guidelines for advertisement. And the purpose is very simple. Institute has allowed some modes and mediums for advertisement. These should be used properly. So there is a guidelines for that. And the first one is write-up. Chartered accountants can advertise themselves with the help of write-up. Always mention clause 7 because write-up is an exception of clause 7. So there is a shortcut. Central Region FCA happily uses media. C stand for, there should be always common sense now. C is for compliance. Whenever you make a write-up, there should be compliance of all the CA Act rules, regulations made thereunder. In write-up, you should not make comparison that you are better, superior than others and make derogatory, bad remarks, unsubstantiated remarks about others. Region R for, you should always maintain reputation of the profession. Don't do anything which tarnishes the image of the profession. Then FCA, F stand for font size should not exceed 14. C for claims, don't make exaggerated claims about yourself, about your services and what kind of benefits clients have gone. Happy, it stands for honesty. Be honest. Don't use monograms. Creatively writing the letters using monograms is not allowed. Don't use testimonials and endorsement of clients. If ICI gives any directives, listen to that, change your write-up immediately as per that. Identify yourself through membership number and firm registration number, that is mandatory in each write-up. Don't highlight your professional achievements or government achievements, professional achievements, that's not allowed. So what kind of information will come? So there are two columns, individual and firm. Both are going to post. First thing is CA logo, MRN, FRN. So personal details, name of the CA, name of the firm, details of the partners can be given, passport style photographs. Then you can give personal details like when ACA, FCA, COP, the date they qualified, what kind of qualifications they have, languages they use. You can also mention whether they are having management consultancy company, they are having management consultancy company, are they managing any MCC? Also mention, are they affiliated to any network? And age, so personal details, age or year of establishment of the firm. So personal details can be given. Then give details of number of employees, number of articles, others, employee details. Third, give services they provide. Yes, services they provide, and then contact details, phone number, address, HO branch, office number, working hours, may have signature, date and place. So 4 types of details: person details, employee details, service details, contact details. Then let's talk about website. Whenever website is there, apply clause 6, because in the earlier versions of the module, it was given along with the clause 6 only. So shortcut is casino website has PAPs, and there are 3 P's, PAPs, clips. C stand for content. You can have all kind of professional and educational content, absolutely fine. Then casino A stand for assignment. You can always maintain the nature of assignments you have handled, but don't give details of the clients and fees you are charging to the client. If there any regulatory authority, they have issued regulation that client names and the nature of assignment and fees should be included in the website, whether it is India or abroad, then you can include the details, but then always mention as per which regulation it is being given and include for the limited time which they ask for. Then casino as is services rendered. You can definitely, now listen guys, when it comes to assignments handle, always pull request. Nature of assignment handle, pull request. Services rendered, you can definitely give what kind of services you are rendering, but only on the pull request. Pull request means user should take initiative, he should search, he should click and ask for information, then only it should be given to it. It should not come as a pop-up or forceful information. Then I for ICI records, information given in the website should be as close as possible to ICI records. And for no solicitation, website name should not be in such a manner. Once you make a website, don't circulate this website through bulk SMS, WhatsApps, emails and ask people to visit it. You can put on the stationery, but don't try to click it. Then online consultation. Can you give online services? Of course, you can give online services free of cost or with or without fees. That is allowed. Casino website name. It should be as close as possible to the name of the individuals, name of the firm, trade name, whatever they are known for. It should be as close as possible, and don't try to solicit people through it. Don't try to say that you are the superior ones and you are the best ones. That is not allowed. PAPS, P stand for professionalism. Don't put any information which is non-professional, like don't put any non-professional, putting cricket scores, astrological details. These is not professionalism. Then advertisements. Advertisements, you cannot sell advertisements, Google ads, banner ads, no, not allowed. P for pull model. Whatever you do, put it on pull model. So name of the website should come in pull model. Whenever people ask for it, don't push it. You can get yourself registered in search engines. That is absolutely fine. Then next piece for partners and employees. Definitely you can put partner employees details, and their area of experience should be again on pull request. You can put photograph only, passport style photograph. Passport style photograph means half photograph with a white background. That is passport style photograph. Then S, secrecy of the client. What you can have client registered, but maintain secrecy. You can have chat rooms. There can be chatting. There can be protocols. Again, ensure confidentiality and data security. Then clip C. Always follow Code of Ethics and C Act. L for links. Very important. You can put government links, regulatory authority body links, links of council, institute, main institute, regional council, branch council, and other professional bodies. 4 types of links. No links of any association, Rotary Club, or any other firm is not allowed. You can then eyes for, you can always put identity and contact details, complete contact details. You can put year of establishment, and telephone number, address of the firm. That is absolutely fine. Permission. No need to take any permission to make website. No need to take any permission. You can make it in any format, any color, any design, any color, any design, any format. Absolutely fine. As social network site, you can put social media handles on your website, so you can give link to the pages. Okay, but then don't ask people to click it. Don't ask you to like it. Don't ask people to comment it. Don't ask people to follow it. Just put it the link. That's it. So there were with respect to this, with respect to website and write up. The next is online platform. So there can be non-CA platforms of banks and financial institutions. You can give services through them. They can request, definitely can give, only consultancy services can be given. Prefix CA can come, firm name can come. Don't use chartered accountant as designation in the firm name. Don't give contact details, website details of the CAs and CA firms. So only their name should come, but it should not lead to their advertisements, branding or advertisements. Then next is, can you have your name in telephone directory? We can definitely have name in telephone directories with or without payment. It can be there. If it is having a professional section, your name should come in the professional section, but it should be for the same geographical region in which you are located, not others. It should be in alphabetical order. It should not be bolder or displayed in a different manner. And this should be open for all. It should be open for all. Trade associations can make it, communities can make it, absolutely fine. If there is a service aggregators and their aggregators, electricians, plumbers, don't get registered yourself along with other businessmen. No such, don't become part of the aggregator. Can we have specialized directories? Absolutely fine. There can be limited specialized directory with certain criteria, age criteria. There can be age criteria. There can be region criteria. Okay, so they can have a specialized directory. Specialized directory, their name can be included. Same things. It can be in a specialized directory. The thing is that specialized directory is a criteria based. It can have more details, but ensure that it should not lead into publicity or solicitation of work. There can be personal details, hobbies, liking, fine. Where you are director, that is fine. That is allowed, but no highlighting, no highlighting, no bolder types, no client details. Then press advertisements. Yeah, that's very important. Put clause number 7 also there. You can put press advertisement. Ensure that name of the firm is not very bolder, very prominent, and it should be well-known firm or something like that is used, superior to others. You can put advertisement for recruiting staff for your own office, for recruiting staff for your client. That is allowed. You can have advertisement for buying and selling properties for yourself and your client. That is allowed. You can put these advertisement when you are working as, you can also put it when you are working as liquidator, trustee, receivers. Then there are self-regulatory measures. These are recommendatory, these are not mandatory. So in branch audit, don't take team bigger than 10 members for branch audit. Instead of get it done by the local firms with less than 10 members. But then the exception, if majority of the records are maintained at HO, this is not applicable. If significant operations happen at branch, again, this is not applicable. And irrespective of what we discuss, HO auditor will always have right to visit the branch under Companies Act. Joint audit. So in large companies, there are senior big CA firms which are working. If companies want to appoint a small firm, less than 5 members as a joint auditor, so that they can get developed over a period of time, senior firm should not object. Ratio between qualified and unqualified staff should not be less than 1:5. When we talk about unqualified people, articles, peons, typists, those who don't do professional work, they should not be counted. Then disclosure, whenever you earn non-audit fees from directly, indirectly through other firms, you should go and inform the company client that I earn non-audit fees directly also and indirectly also by so and so medium. Minimum scale of fees is recommendatory, it is not mandatory. It is given by CA Institute as per the category of cities, along with guidance note on tax audit. At the end, they always give that. Try to follow it. So there is a notification by ICAI regarding fee disclosure to ICAI. It is a mandatory thing. Module has by mistake included this in self-regulatory measure, but it is not a self-regulatory measure. It is not recommendatory. It is mandatory. Let's understand. So they have divided audit clients into two categories. One is non-PIE and PIE. Non-PIE means non-public interest entity and public interest entity. So if you're doing audit of a non-public interest entity and fees which you're receiving from the audit client is 40% or more of the gross annual total fees, then you have to make disclosure to ICAI that we are getting dependent on one particular client. That doesn't mean that you are disqualified or you cannot do it. You simply need to disclose it to ICAI. When it comes to PIE, that is public interest entity, if you are getting 20% or more from a single client, you need to inform it to ICAI. Then there are two exceptions. The fees which you are getting from these clients, fees of the fees which firm is getting from these clients, if it's not exceeding 20 lakhs, then it is not a big deal. It's not a big deal. Absolutely fine. Then this disclosure is not applicable. If these clients are government companies, government entities, PSUs, nationalized banks, public financial institutions, or the auditor appointment is by the government, then again such disclosures are not required. Don't doubt this particular situation. Don't be tensed about this situation. Now, recent decisions of Ethical Standard Board, we have classified them into sections and clauses for ease of remembering them, for writing better answers. Okay. So section 6, very simple. Section 6 is for significance of COP. If a chartered accountant is working as an employee and representing employer in front of tax authorities, then no COP is required. But then if you're fighting cases for other employees, for other people, then COP will be required. Then first schedule part 1 clause 11. Clause 11 shortcut is CA should be tempered. He should control his temper. You can say that CA should be tempered. C. Chartered accountant in practice cannot take custom broker license and act as a custom broker. Chartered accountant in practice, then agency cannot take agency of UTI, NSDL, GIC, take agency and sell their products is not allowed. Chartered accountant in practice can become trust settler. Just like liquidator of the company, he can become trust settler. That is allowed. Then equity research advisor. Yes, he can become equity research advisor. He can give advisory services. That's absolutely fine. But he cannot make research reports and publish it to public at large. Otherwise, people will think he has left chartered accountancy, he's doing something else, he's doing other business or occupation. So you cannot publish retail reports. So brokers generally issue retail reports for their customers so that they can do trading in it. You cannot issue those reports. Mediator, of course, you can, just like arbitrator, you can be mediator, no problem at all. Professional advisor on intellectual property right, obviously, yes, you can go for it. You can become an advisor, but you cannot become a trademark attorney. So trademark or IPR attorney, so these are basically lawyers doing the practice of IPR and trademark. You cannot do that. That will be considered change of profession. Don't do it. Then e-return registration. This is not technically a clause 11. This is not technically clause 11 case, but then we by mistake we have covered it here. E-return registration. So a chartered accountant So this can be considered in others. A chartered accountant who is doing job can get himself registered as an e-return preparer and do e-return filing. That is absolutely fine if it is not in conflict with the obligation, is duty obligations. Registration authority in DSC, digital signature certificates. In DSC, there is a registration authority. Okay, so you can play a role of registration authority, that is allowed. Important. Then very important, equity derivatives and commodity trading. A chartered accountant in practice, a chartered accountant in practice can do equity derivative trading on his own behalf. That is allowed, but he cannot do it for others. He cannot do it professionally for others. That is not allowed. Commodities trading, he cannot do it whether in individual capacity or in professional capacity. Director, resident director. Now, it is required as per Companies Act that one of the directors should be resident director. He should stay in India for at least 182 days in a calendar year. So a chartered accountant director who is a director simpliciter can play that role. He can be considered a resident director. That's not affecting his roles and responsibilities and his work. It is absolutely fine. It is allowed. Then we talk about valuer of, then second schedule part 1 clause 4. So clause 4 is in which situations you cannot do audit, you cannot give opinion. Valuer of unquoted equity share. Now, if you're doing valuation of equity shares under tax laws, then you cannot act as a statutory auditor, tax auditor of the same assessee. That is not allowed. That is not allowed as per Income Tax, and Ethical Standard Board has clarified it. Yes, that is not allowed under Income Tax Act. Under other acts, it can be done. Then, so the shortcut is VJ is playing famous disc bits. VJ, video jockey is playing famous disc bits. Then joint venture. Director of a venturer company or a partner of a venturing firm cannot do audit of a joint of a joint venture entity. Then very interesting, family member. If immediate family member, that means spouse or dependents is a managing committee member of any education institution, even though it may be an honorary office, not earning, honorary office, even though, then chartered accountant cannot do audit of the society under which, cannot do audit of the education society under which this education institution is operating. So if relative is involved in managing committee of education institution, chartered accountant practice cannot do audit of the education society. Again, this is not part of clause 11. This is better. This is part of clause 11, not clause 4. Can a chartered accountant practice become director in cooperative society? Yes, you can become director simpliciter, part-time director. That is absolutely fine. Then internal audit of PF trust. Now, this is the interesting thing. So, there's a government companies generally make employee provident fund trust to manage the investments of the provident fund. So, if government company has made this trust, in for chartered accountant practice who is doing internal audit of the PF trust, that person cannot do statutory audit of the government company. Then share acquisition by internal auditor. Internal auditor can acquire shares of the company in which internal auditor is working. Concurrent auditor, let's understand, it's again very interesting. Concurrent auditor, suppose a bank has sponsored another bank, bank X has sponsored, created, made, established a regional rural bank Y. Then concurrent auditor of sponsor bank cannot do statutory audit of the RRB. So concurrent auditor cannot do statutory audit of that bank also and the other bank which is sponsored by them. Then bank audit, if you have taken loan from bank, even though that loan can be on the basis of security, fixed deposit, given enough fixed deposit, you have taken loan, you cannot do audit. Internal audit of company, now they have reversed the situation. If you are an internal auditor of a company and you want to do statutory audit of the employee provident fund trust, that is allowed. That shows that they are very cautious with respect to statutory audit of company. Statutory audit of company, they are not very cautious. They are not very cautious when it comes to public provident fund trust. So anyone can do that audit. That's what it indicates. Then trust audit. That's interesting that members of the trust, beneficiaries of the trust can do trust audit, no issues with that. Person doing stock audit cannot do statutory audit of the bank. It can be any branches you must be doing it. You cannot do then main statutory audit. Then connected to Council Guidelines 2008, indebtedness. Okay, that's very interesting. We have studied a guideline with respect to indebtedness. This particular guidelines will not get applicable to internal auditors, concurrent auditors, or auditors where report is submitted to management. Then this indebtedness limit will not get applicable. So a lot of audits, this indebtedness limit will not get applicable. Council Advertisement Guidelines 2008 and Clause 6, they are closely connected. JAM at Kendriya Vidyalaya, joint training. Chartered accountants can come together and give joint trading, collect money and share with themselves. It is absolutely fine. This will not be considered as advertisement. And you can say that it is allowed in clause 11 also. Registration, Udyog Aadhar registration, absolutely fine. Absolutely fine. Get yourself registered with Udyog Aadhar. So this is a business Aadhar card. Okay. Using messaging applications, not allowed. Bulk messaging application, not allowed. Using kiosk services, putting up a very good kiosk at places, in exhibitions at places, and giving services through that. Just like you can have office anywhere, you can have kiosk services, and with that we can give CA services, which is allowed. Visiting card content should be simple, details, basic details should be there. Vision, mission, value statements. Don't try to act smart, try to become different from others. That is not allowed under clause 6. Putting QR code is allowed under clause 7. The only clause 7 is important, is allowed under clause 7. The only thing is that only that particular information should get saved in the mobile phone, which is allowed. Then other misconduct related, lien on books of accounts. Lien on books of accounts, you can definitely you cannot exercise lien on books of account even if the fees is pending. It's the other misconduct. If a practicing chartered accountant is a director in a company, he cannot do audit of that company. On the same lines, he cannot sign ROC forms also. The chartered accountant who is a director cannot sign ROC form also.